If you're enjoying this video, please take a second and hit the like and subscribe on this channel. And never forget to do not put pineapple on your pizza.
The most handsomest gentleman on this panel, baby. What is up, beautiful people? Welcome to the revised and new midday show. That is your girl, Adara. I'm Sharif, and we are brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the good folks there at Search Trader, who, by the way, still have their trading contest on 100,000 fake smackaroos, and you make $1,000 if you're number one. We know the NOS boss was on as well. What's that? Oh, absolutely. Go for it. New midday intro, apparently.
Oh. It says Confluence. I love it.
How to trade midday, and it did say Confluence, so we're going to hit the bang. For Obi, what is up, everybody? How was your weekend, first and foremost?
My weekend was good. What did I kind of hung out at Toronto International Film Festival. They were doing like this whole weekend for customer appreciation. So I was hanging out there, did some writing, did some podcast listening. It was like a productive weekend. What about you?
Very nice. Yeah. Very relaxed. Ate a lot. I'm like in the vicinity of almost 5,000 to 6,000 calories on Saturday, which was ridiculous. When you go to your parents' house, everything's free.
Yeah.
So you're like, oh, right? And yeah, it's bulking season. So who can complain about that? All right, guys, we are going to talk about risk management today and how not to blow up your account. I know when I first started trading, I heard all these anecdotes. You got to go through 2 or 3 accounts. You got to blow them up in order to really understand how to trade, how to understand the value of money, this, that, and the other. I tend not to believe all of that. I don't think you have to blow up your account. I think there are some ground rules that you can start with that can help, at least mitigate or reduce the chances that you blow up that account. But we've all heard the anecdotes before. Hopefully, some of this information that we give you today will help reduce the chances of that somewhat. Now, risk management, a very wide term, Adara, right?
Yeah.
So many things can be encompassed under that heading, right? First and foremost, before we talk about stop losses and before we talk about, bailing out of something and your risk to reward ratio, we got to talk about entries.
Yes, of course, yeah.
And so let's talk about Meta today, because Meta, an absolute rocket ship. It's up 2/3%. So when I say rocket ship, all things are relative at the moment, but it is it is really outperforming the NQ, which is down 1/3%. You got Meta up 2/3. Now, getting into Meta here, I said to myself, look, what is your entry? You're not going to chase this bad boy. It's not coming back down to 326 where it was prior to the bell. So what would be the move here? Well, I said I like the whole dollar level. I like 330. Okay, 330 seemed to me like a key area of resistance. And if we came back to it, I was looking at it as acting as support. So that should kind of give you the first that should foreshadow what I'm trying to get to. I'm not saying every trade has to be a dip trade. Come to the chart, please. And not every trade has to be a dip trade. But if you're going to get in on a stock that's already strong, choose your level. To me here, it was the area that stood out the most. And look at this, coming right back down at that 330.5, right? Kind of holding that 330 level, still up 2/3%. So planning your entry has to be, number one, the first order of business that you take care of. Second order of business here would be to figure out, well, where is this meta trade wrong? So say I get triggered at this 330.25 that I have my dip trade on. Where is the trade wrong? Well, you guys know how I trade. So it's probably not going to be any shock. Unless there is really something different to show me that I should be respecting some other level, it's going to be the lower low, okay? If I see a lower low, a clear trough break, I'm going to say to myself, this trade is no longer valid. And even if it is, if it becomes valid later, I can always get back into it. But there has to be some line in the sand that you say to yourself, I'm out here, rather than just dollar cost averaging in. Because maybe we can do that on the floor, because some of these guys back there, they have almost an unlimited amount of money that they can punch into. We all can't do that at home, okay? We all have a finite amount of money, even if we pull into margin, there is a finite amount of money that we can do, that we have at our disposal. Sorry, I'm a little foggy. It's Monday, and we can't be DCAing into everything. Dollar cost averaging. That's what DCA is. So 330 to me would have been the obvious line here. Now, a newer low would have been the break of this trough, which would have been the break of 329, and which also just happened to VWAP. It's nice when those two things conflate. So that's how I would have gone.
Inflation.
Yeah,
yes.
There you go. So anything to add into basically what I've said so far, or any questions before we continue on to the next thing here?
Yeah,
and it doesn't even have to be about meta.
Okay, yeah, no, I was gonna say, I think it's like the same with, I like, if I'm trying to enter a dip trade, which as we know, I enjoy doing dip trades, right? I do like to see that we've kind of consistently held that level and maybe even had like one, 3 or 5 minute green candle to the upside on that level, right? Because you want to make sure, especially because something I was dealing with a lot when I was trading earlier is kind of being able to tell the difference between when something is retracing or when we're just seeing like a dip opportunity, right? So I like to sometimes see another candle to the upside as well. I still have like this meta here, right? So for example, even though, we are seeing a little bit of strength here at this, what is this, like 330, 70, 75 area, because we have this other green candle to the upside, that might be a point where I would enter when you see support and when you also see it's an opportunity for a dip and it's a higher low. So yeah, I agree, and I thank you for explaining it in that way.
Absolutely,
yeah.
No, and I tend to agree with you. Are we live? Let me just make sure that we're good to go here.
It's like a different stream. I know I had
it's a different stream. That's why. I was like, what's going on?
It's like
because I don't have the chat is like not updating. Okay, there we go. Okay. All right, now I just got to close that bad boy, and I got to load up a new bad boy here. Sorry, guys, allow me a second just to get organized. I didn't realize that we were on a new stream.
It took me a second, too, and I didn't want to, like, say this while you were talking or anything, too. But, yeah, so here we are in the new chat with the new stream and the new midday. Yeah, I think, like, definitely picking a point of entry, it's something to minimize your risk, right? Because I think, too, you don't want to get in too high or too low. Because I find too, especially when I first started and I was exclusively doing longs, my issue would be kind of as Sharif was talking about with meta, like you want to get in on the trade, but the issue is sometimes you can get in like too high.
Yes.
Right? And then you kind of end up as it's falling to the wayside, right? And the other issue with that too, we were talking about this, I believe, last week. Right. The other issue is that the natural tendency to kind of want to get in as something is falling to the downside because you want to get the cheapest price available. But then what happens sometimes is instead of it coming back up, you actually just end up buying into a trade that's heading to the downside.
Yeah.
It's interesting. Yeah.
Absolutely. All right, so let's look at this meta position here. First, I'm not in a position on meta, by the way, but I had a dip trade set up at that 330.5, and I'm actually kind of impressed that I chose that because it's holding it to a T. Now it's moving back up into 332.
Yeah, it's a good place to choose. Yeah.
Right. So first thing is planning your entry. So every situation is going to be different. There's not going to be one set of rules about how to get in and like basically, essentially, am I going with the momentum? Am I going for a dip trade? Each situation will call for a different strategy, okay? In this case, it was extended. It showed its obvious relative strength. I'm talking about meta. And my play here would have been to take it off a dip trade, off a key level. You know how much I like those $10 levels. 330, 340. They are psychological areas of support and resistance. Therefore, on an extended name, I'd rather not punch at the highs. I'd rather look for a dip trade. Now, if that means leaving or missing out on the trade, it means missing out on the trade. All right, so that's the first thing. Now, the second thing is sometimes a lot of people use risk to reward ratios. Not everybody. Some people use risk to reward. And essentially what you're doing, what you are trying to do here is you're saying to yourself, all right, based on this 330 dip on meta, I know it already touched 332 and a third. So if at least comes back in today's high, I'll make $2.33 off that high of day touch. So how much am I going to risk to make $2.33? Everybody has a different risk to reward ratio, and some people don't use them. Some people use 1-to-1, and that's obviously a little bit more risky. 1-to-2. The one that the textbook talks about the most is 1-to-3.
Okay.
Because you can actually be wrong most of the time in your trades. So most of your trades can end up being losers, but if you cut them at the exact right moment and then let your winners run at least to your target, you will actually be profitable.
That's an interesting way of looking at it. Okay.
It's just some math stuff, right?
Love it, yeah.
So the risk to reward ratio that people talk about the most, like I said, is that 3-to-1. Now you're not always going to get 3-to-1, and it's a great dream to have, right? Unless you're extremely disciplined and you only wait for those A+ setups that come in, and you only pull the trigger when that situation presents itself. If you can do that, hats off to you. I can't do it. I suck, right? And I end up seeing trades that maybe aren't the most A+ and present a 3-to-1, and I end up punching in anyway, but sometimes they're profitable. So if you want to have a range between 3-to-1, 2-to-1, essentially what you're doing here is you're trying to make sure that you're only going to lose the amount that you've planned on losing, okay? So in this case, it would have been $1 for me on Meta. That 330, that dip trade, and I would have given it to 329, mainly because that was the area where we had trouble breaking out. And when we broke out, we retraced back into 329 and held it as support. Oh. Not only that, but you also had VWAP to add to the confluence of that level.
I could tell it was going to be confluence.
You saw me reaching for that for the bang there on the stream deck. But yeah, so essentially this one would have been more of a 2-to-1 than a 3-to-1 because we have a high of 332 and a third, okay? Mm-hmm. So the idea, the risk to reward ratio here is to try to make sure that your winners make you enough money to cover for your losers, so that even if you're wrong, at least 50% of the time for a 2-to-1, you end up making money, all right? Again, it seems a little, vague and more conceptual, but when you actually start implementing it in real life, you'll see exactly what I mean by that. So that's the risk to reward. Anything to add to that?
It's interesting because I think I read about the risk to reward ratio, but it's interesting having it explained. It's a combination of the mathematical elements, but also what you're seeing in the chart, right? Like when you're talking about Meta with the what was going on at that 329, 330 area. So I think it's worth looking at too, because I like to plan my entries with a combination of the chart and the tape, but I feel really looking at what's going on with the chart and bringing that back to the mathematical perspective is something I want to keep an eye on.
Fantastic.
And for sure. Yeah, I appreciate that.
And the other thing here, with respect to the first topic on the topics manager, they were planning entries. Yeah. Now I'm looking at this planning entries perspective from the risk to reward ratio perspective. It's much more nuanced planning entries, and we'll get into that many more times in the coming days. I know some people were talking about in the chat, using different time frames for which to get in. For example, I was talking to Steph, I believe on Friday. I said, Steph, how are you trading your futures entry? She's like, look, I chart on the 30 and I execute on the 5, right? And so many people will have that kind of style where, they're doing their more macro view on a different time frame, a wider time frame, the hour, the 2 hour, the daily, whatever you're going to use, whatever your style is, and then to pinpoint your entries more closely and to make sure that they're nuanced with the current price action, not what you saw half an hour or 45 or an hour ago. You go on a smaller time frame, whether that I know you like the 3.
I like the 3 and the 5.
You like the 3 and the 5. I like the 1 and the 3 because the small cap gappers, you really need to trade them on the 1. Yeah. Right? But when I'm doing my big cap trades, almost always on the 5. We'll talk more about actually entering trades with respect to different time frames, but we're not going to get into too much today because we're talking strictly about how to plan your, essentially risk management.
How to approach a trade, yeah.
So risk to reward ratio, important for some people, not so important for others. I would submit to you, it is, if you can develop it as a strategy and you hold true to it, it's one of those ones that will keep you out of some hot water. No question about that. Now, whether you're disciplined enough to execute it every single time, if you are, my hat is already off to you because I can't, I suck. I lack that discipline. All right, guys, stops and outs. Now, before I get into the nuances of stops and outs, give us a quick synopsis of what you perceive that to be, and maybe so we can build on some of your ideas there.
We'll see how
I don't mean to put you on the spot,
it's okay.
So don't feel
I understand.
just because if you say something that maybe other people don't agree with, this is why we're here.
Absolutely, yeah. So I think for stops, my understanding is a stop is like kind of more of like a stop loss situation when you're trying to exit a trade, like you mentioned with having, for example, with the Meta example, making sure that you kind of didn't want to, about where your point of entry is. I know sometimes that's where you like will kind of set your stops around so you're not losing anything from the trade. So that a stop loss is basically where you kind of, if it all goes wrong, it's the most you're willing to lose, basically, right? Whereas then an out is basically where you want to exit the trade, assuming all goes well. I don't know if that's correct, but that's been my take on it. Okay.
Okay, so let's go into a little bit. Now, when I first started talking to my friends and my family about day trading, they're like, "Are you out of your mind? You know what? Everybody loses their money day trading, bro. What are you doing? You got a career, stick to it, this, that, and the other." I'm like, guys, it's not about going and buying a lottery ticket where I'm throwing like $100 at the lottery ticket or lottery tickets, and I may or may not make money out of it. No, I'm investing $100. And I know exactly how much I'm going to lose because, again, there's a risk-to-reward ratio, and the risk-to-reward ratio implies an out if the trade is incorrect.
That's true.
Okay?
Yeah.
And so I should know, if I'm following my trading plan correctly, going in, what my potential profits are, and exactly how much I will lose at maximum. And that is what my stop is. Now, let's get to the screen. Not everybody's trading on pre-Pro 8, obviously, but in this particular case, let's get to the screen. What we're looking at here is something called a script stop. Now, a script stop has three variables. One is the actual price, the triggering price at which you're telling the computer, get ready, get me out of this position, okay? And in this case, I hit F1 on my key, and you'll see here on the bottom left, it says stop price, okay? So stop price, let's say I'm in the Meta trade, I'm long 330.5. I want to get out 329. So I'll never, ever sit at the whole dollar value. Call me superstitious, call me crazy. I always want to give it a couple of pennies just south of the actual value. So in this case, it would be 328 and let's just say 95. So I'll give it 95 pennies. That is the price that you're telling the computer, get ready to bail. The triggering price. Now, that's not the only variable. In this case, it's a limit stop. Now, we're going to get the difference between a market stop and a limit stop in a second. But in this case, because it's a limit stop, there are three variables. The second variable being the maximum price that the computer can trigger. You've already told the computer, get ready to get me out at 328.95. In this case, 328.90 will be the limit. So you're going to give it a 5-penny buffer between the triggering price and the limit price. Now, that may not be enough for Meta. We know how wide the margins, or sorry, the spread can be between the bid and the ask on Meta. Right now, it's actually already 5 pennies. So that's not even enough. So the difference between your triggering price and your limit price is completely dependent upon the actual stock that you're trading. If it's a 1-cent spread, like Adara likes to trade, she likes to trade ones with tighter spreads, then you can keep a tight spread on there. But if it's going to be one where liquidity is an issue and the spreads are wide, you have to leave the spread between the trigger price and the limit price to wider. If you don't, it may not trigger, and then you're basically left without protection. Let's go ahead here and give this 5 pennies. And then the third variable is going to be the shareage. How many shares I want to get out, right? So what if I only want to get, so Sean does this sometimes. Sean will say, okay, no, if it breaks 330, I'm going to get out a half.
Oh, yeah, okay.
Half, right? That way he mitigates a little bit of risk. He takes half off the table, but if in case it goes back up, he's still holding half.
Okay, that's
so
nice.
Sean does this a lot, and I'm sure people in the chat have seen Sean do this. So that's the third variable. Now, in this case, do I want to get out of the whole thing? Is the entire trade wrong, or is there another level below that 329 where I think it could find some support, right? And that's going to influence my decision as to how much shareage I'm going to get out on my stop.
Cool.
Well,
okay.
Anything so far?
That makes sense. I actually have a question though too. This might be a little early in this lesson to ask this, but so for what happens when you get like triggered out of a position? Because I overhear this happen all the time, where someone you just like briefly there's a wick and then you get out. How do you know if or when to re-enter?
That's a very good question. I think it's very dependent on the actual stock.
That's true, because sometimes you might not want to re-enter anyway, right? But it's like a situation where you briefly get a wick out and then it keeps going up. I guess that kind of situation.
Exactly.
Yeah.
Right. And then like I said, you know, like when we look at Meta, for example, today, 330 is not the only level that I really like. No, I like other levels. Yeah. I like the 328, almost a 329 level, 328, like say 85. Why? Because that's Friday's close, and you guys know how much I respect closing prints as opposed to intraday action, right?
Yeah.
So that would be a very important level for me as well. So I may want to reset up the trade in there. I may want to have a dip trade set up in there to add to the half the trade that I got out of. Any number of things can happen. That gets, you know, more complicated and more advanced there. I also like VWAP, 329.5. You know how much I trade off VWAP at times, depending really on...
Depending on the stock, too.
Exactly, right? Not all stocks are on every particular day is going to respect VWAP, and then some days you'll see it respecting over and over and again. Everything is subjective. So your stops and your outs. Now, the question that I used to ask a lot was, where the hell do I place my stops, right? And is it based just on my R&R, my risk to reward? So if I get in at 330 and I want a 3-to-1, that means I got to get out at 329. Well, the market doesn't give a you-know-what about your entry, okay? It doesn't, okay? It doesn't care where you got in, doesn't care where you're going to get out. So there were so many different ways that the textbook showed to base your stop loss. Some people want to base it on something called ATR, average true range. So you'll basically find what the average true range of a stock is on a day. So for example, Meta, how much does it move on average on a particular day? Is it $7? Is it $5? Is it $3? And then basing it on your ATR and basing that, taking that data point and placing your stop. So there's ways to do it like that.
That's smart. Okay, I wouldn't have thought of that.
There's we'll get to the super chat in a second. Thank you very much, Hayes, for that. Appreciate you. The Hayes Records, a hell of what's it called? A participant in the chat.
Yeah,
and
absolutely.
Always,
Thank you very much for the super
always
chat.
adding good stuff. All right, guys. So what was I talking about there? Where to place the stop loss. It becomes a very complicated thing. Essentially, what I do. I'm trading on highs and lows because I'm trading intraday, okay? What I don't want to see is a new low made, a new identifiable low. So if I'm looking at crests and I'm looking at troughs, I'm looking at where the trough is lower than my entry, okay? So let's go to this example over here. So Ram, if I was to get in over here at 330, okay? Where would the obvious trough, say I was getting at 331, where would the obvious trough be? What would be over here, right? Around this 330 area. Now, if you really want to get to the wick, it would be that 329.5, right? And that's something you're going to have to decide. Are you more heavily persuaded by closing prints or intraday wicks? Just sufficient for you? I mean, that's going to have to be something that you decide. Personally, for me, it's the closing print. I mentioned that multiple times. So if it was to break below here, that would be my out, okay? And then I could reset up a newer trade later. So many different ways to choose your actual outs and to place your stops into them. There's no hard and fast rule, but if you're going to choose one way, stick to that way. That way you have consistent results, and that when you pull your data and you're trying to see, okay, well, where am I going right? Where am I going wrong? Where am I having, what situations are causing me to have more success? You have a consistent methodology that you're following and that you're not all over the place, and so that you can actually pull and extract the data.
Yeah. And I'm guessing, too, if you have a consistent strategy, that it helps you learn more from that strategy, right? Because you're like, as you use it, too, you're kind of seeing what works, what doesn't work. Yeah, that totally makes sense. So there's an interesting question here in the chat that I...
Go for it.
Let me find it here. from
saw that one
HPDS,
too.
are the algos and market makers able to see the stop orders? Because I also don't know this, so I'm very curious.
That's a very, very great question. Okay. All right. So we're going to get into a bit more of an advanced topic right now. But essentially, market makers, they have something called level 3. We only have level 2, right? We see the best ask, the best bid, that's level 1. And then this over here, this chart, all these moving numbers right over the blue and the white, this is level 2, where we get to see all the market depth to the bottom and all the ask to the top. That's as deep as we can see into the market. However, market makers, people who actually take orders from people who are acting as the middle, they own shares, and you may want to buy, and there may not be any in the market. They'll sell you what they have, and you may want to sell. There may be no buyers. They'll buy it from you.
Okay.
So these people are making markets. Now, they actually see where your stop is.
That makes sense.
Okay.
That's interesting.
Now, because they're the ones hosting the exchange, and they know where your stop loss is. So there's this, belief, and I don't know how accurate it is, okay? Belief that, if there's a lot of stops at one level, they'll want to blow through those stops so they can collect commission fees, obviously, and make money on people. So that's basically what he's asking. Do the market makers see your stops? Do they have level 3 access? And if they do they act upon it? I don't know. I know the information is there. I know some people believe that they do. Whether or not they actually do, beyond my scope of comprehension. Okay. Okay.
Interesting. Yeah.
So I'll just tell you offhand. So level 3 is something that a lot of people talk about. Now that's your stops and your outs. Okay. Yeah. And then your emergency out. You've heard me talk about flatten.
Yes. Yeah. Right. The flat. You're like, oh, I got the flatten key ready.
There you go.
Yeah.
Right.
Very much. Yeah.
Now, the flatten key is a market order. Now, we didn't really get into the difference between limit orders and market orders. We'll get more into that in a second. But the flatten key is a bail me, get the hell out type key.
SOS,
okay?
Yeah.
Yeah, SOS, exactly. So in that case, when you hit it, the computer goes into the market. Now, if you're selling, it's going to try to find you the best, highest buyer at that particular moment. Okay? It's not going to have a minimum. It's going to see what the market is buying for or selling for, whatever the situation is at that moment, and it's going to buy or sell at that price that is trading at that exact moment that the order reaches the server. Now, on our system here, we have script orders. Script orders sit on our computers. They don't go to the market computer in New York. They don't sit on the NASDAQ. They don't sit on the NYSE. They sit on our computers. And then when the certain requirements for them to be triggered are triggered, then they execute. By definition, that makes them a little laggy. However, it doesn't expose our hand to the market makers because they don't know the order's sitting there because they're sitting on our computers.
That makes sense. Okay.
Right? So some people feel, if you want to hide your hand a little bit from the market maker, use a script order. Now, that's not something that I think other people have on other platforms. For example, my platform doesn't offer me script orders. It doesn't. I've got to have my order sitting on their server, and by definition, it makes it.
In the market, okay.
Yeah, exactly.
That's interesting. Yeah, that makes sense.
I need access to level 4, says DVD RD43. Well, let me know what that is, but maybe we'll get it all for you. Damien Oliveris, it's all rigged. Well, look, you wouldn't be the first person to feel that. Yeah, to say that in any event. Yeah, Meta is super strong today now, up over 1%. Yeah, it was hurt last week. That's why, though. Meta was really a slow mover last week. And today, the dead one is Apple, Adair, because literally everything is nice and high except AAPL.
Yeah, we were talking about this earlier too. We were like, I was joking that Apple was upset that it wasn't the dead one last week, so now it's reclaiming its title. Very much as the dead one today, especially with all of these mega caps being super strong right now. Yeah, Tesla is crazy strong.
All right.
Especially too. Yeah, look at that.
So yeah, to go on here, so your emergency out is something called a flatten order. Now, the flatten order is a market order. Market orders, again, go into the market and buy and sell at that exact price. But limit orders, like I kind of explained when I was showing you how to enter your stop orders, a limit order tells the computer, it tells the system, look, under no circumstance pay more for Meta than $330.51. It can get you a better price than that and get you, say, 49, 47, but it'll never get you 52. You see what I'm saying? So the limit order tells the computer, this is as much as I want to pay, okay? And the market order is exactly the opposite of that. It goes into the market at that particular moment and executes.
Yeah.
Okay? And so when you have an emergency out, like for example, on my platform over here, I have Shift C is cancel.
Okay.
It means get me the hell out.
I want to leave. Yeah. Okay.
And it means close the position. It's not like where we have like a flat in here where it says sell 100%. No. It's close the entire position. It's a 100% of the position. It wants to close it. Now, if I'm short, it'll buy. If I'm long, it'll sell.
Okay.
It just means tell the computer to close position. That is a market order. And the reason it's that way is because if you put a limit order to get out on an emergency, you may or may not fill, depending really if the market is moving crazy fast and it gets away from your order, or what the situation is, right?
Yeah.
So for example, say I want to sell at $330.50. Meta comes down into $330.50. But then there is such a big push downwards, it moves all the way down to $330.25.
Yeah.
It wouldn't fill me. Right?
Oh my God, it's been so fast.
Exactly.
Okay.
Unless I put in a market order. And the market order will get you the hell out of there super quick. Now, you know, to me, I like to use these market orders to bail out for the small cap gappers.
Oh, because
not
those,
as much as for these big tech.
Okay.
No, I'm not trying to say the big tech ones are not volatile. They are, but the small cap gappers, they're nuts, right?
Yeah.
You can see them lose 25% of their value in like 2 seconds, right? And that's just the way they roll. These small cap low floaters, right? They're manipulatable. We already decided that was a word on the show, right?
Yeah, it's a midday word.
It's a midday word, baby. So that's the look there, yeah. So anything to add or to ask about what I've chatted about so far?
Actually, you mentioning the small caps just now reminded me of an earlier question I had. So you were talking about, which I think is really valid. I know you also like looking at like past levels of resistance and support and past closes. How, I guess, do you, and I know because you trade quite a few small caps, how do you gauge or decide a point of entry with a small cap when you're actually basically only going on off of intraday action for the most part?
Very good question. So that's very good. So let me pull up one here so that we can actually talk about it. Hopefully it'll be a good enough example. TIVC up 63%. Let's go to that one. Well, even LIFW today was pretty good.
LIFW has been moving for like the past week, I feel like, on and off.
So let's bring in a side chart here, and we'll talk a little bit about LIFW. LIFW, here we go. All right, let's go to the 1 minute on this. Let me put in the ticker. There we go, LIFW. Okay, so this is 9:30. It really started, look, it was moving up in the pre, but look how sparsely traded it is. There's no volume on here. The candles, they don't look complete, they look incomplete. Bodies are, you know, quite short when you compare them
to what's happening later.
Exactly, right? So you can always tell if something's lightly traded just based on the candles without even actually looking at the volume bars. But there, 9:30 comes and we start moving up. Now, where are we before we start moving up? Well, we're south of 6, okay? We dealt with 6 earlier in the pre-market, so I already know that 6 is a key resistance level. We tried to get into 6 in the pre, and we got a quick wick above it only to sell off. So right away, I'm cognizant of the whole dollar as a level of resistance right away, okay? So come the pre-market, come after the bell, if it was to move up and dip back into 6 right away, I would be interested in that trade.
Okay, because then you know 6 is an active area of support and resistance where you can play off of.
Recall, right?
Yeah.
The textbooks say that former areas of support sometimes, or well, more than sometimes, become resistance areas.
Okay.
So if 6 was an area that we had trouble breaking through, likely if we break through it and close above it, it will be actually our backstop.
Okay.
Should we come back down to it.
That makes sense. Thank you.
Right.
Yeah.
So right away, I know that the break of 6, if we go up above and come back below, I'll be interested in that dip trade.
Okay.
Now, it's just, this is my style, okay?
That makes sense.
I don't want to take the break of 6 as a breakout trade. I'm not really a breakout trader. There's a lot of guys on the floor that are and that do it way better than me. And that's just their modus operandi, and it works for them, right? But to me, I would want a dip back in there, show me that you're actually going to use 6 as a level, and then we're going to be golden from there. So when I trade these small cap cappers, I'm always looking for a level to come back into. Now, that could be on the intraday, like what we just did right now, with the fact that 6 was level, or it could be on a previous day. Like, so you know, I always go to the half an hour.
Or the hour,
hour, what have you. And let's have a look here. What did 6 do on Friday? Well, 6, let's go over here. 6 was a level of support on November the 9th. Absolutely.
Oh, okay.
Look at the dip trades into 6. 6 gets bought up, and we end up closing the day off at 6.25.
Yeah, it looks so like it has that look. Yeah, for
absolutely.
Sure. Support.
It's a recycled level. So I'm already cognizant of 6 because of November 9th. Okay. Come this morning, and then we break through in the pre, can't continue, and then we come back and dip to it after the bell. That just gives me more courage and more belief in the fact that 6 is an interesting support level.
Okay.
So that's how I would look at it. Now, for the break, for a stop loss, if I'm going to go 6 long or 6 dip trade, now where am I getting out? Well, we got to figure out that on the 5.
Yeah.
So 6 is over here. To me, if I'm getting long 6, where am I wrong? Right here. This area right here, I'd have to give it to 580. So again, you know, to me, it's always really breaking through the areas of the trough, right, where we make a newer low. Okay. And if we make a newer low, that's just my style. I want to get out, and then maybe we'll set up on something a little bit different if it's continuing to run. But if I was to get in at 6, the 580 here would be the newer low on this trough, and that's where I'd have my stop set up.
That makes sense. Yeah. Thank you. So basically, if it's a stock where you don't have as many previous levels, or it'll move really quickly, it's just good to look at both the intraday levels and then also what's been going on in the daily.
Absolutely.
Thank you.
Yeah. Well, exactly. Remember we talked a little bit about you know, how some people use like the 1 hour to plan, the 5 to execute,
or the half hour. Yeah. Okay.
The half hour, whatever the situation is there. So that's a look, and that's how I'd be executing on a small cap gapper. I don't think that's exactly how I'd be executing on a big capper though. The big capper, a little bit different, especially with how they move, right? I wouldn't be as hesitant to take a breakout trade. For example, on Apple, like right now, let's look at Apple right now, because Apple, the dead one today, is having trouble breaking through that 185.
It's living up to its name, yeah.
Right?
It's being dead, yeah.
Look at this. So we do have wicks above 185 there. It comes up to 185.14. But look where like the majority of the body of the candles are. They're all south of that 185.
Yeah.
So clearly 185 here is an important resistance level. So if this market starts tanking, then I definitely want to be interested short 185, and then maybe we get something like a 184 touch. Now, where am I wrong if I get in short 185? To me, it's a closing print above that 185.20, because then that'll be a newer high. So in the same way that I would get out on a lower low, I would get out on a higher high on a short.
Okay, that makes a lot of sense. Thank you very much.
Yeah.
Yeah, just looking at how like using risk and elements of risk management can help you plan trades. Yeah.
Yes, exactly.
Really interesting.
Yeah, and NVIDIA, by the way, guys, is running. So let's take a quick look at the market. Let's do a quick market update here while we catch our breath from the teaching session over here. Everything is strong, save and except for Meta. Now you have a bunch of names in the negative. You got Softy down 0.4. It's still negative on the day. It needs to break that 369.66 to go green. It essentially closed off at highs on Friday. Amazon as well, down 1/3%, but look at that V-shaped recovery on AMZN, looking to break that 143.5. If it does, it goes green on the day. It also closed very much near highs, Adira, on Friday as well. Tesla is an absolute rocket off that news today that they're going to be making an Elon Musk movie. No, I'm just joking, of course. It is because they're doing that.
That'd be crazy if that was the news.
Can you imagine?
Though, right? It is true, but it'd be crazy if that's what's moving the market.
He wanted that movie bad.
Oh, he's excited. He's like, funny. Oh, Darren's going to do a great job.
Yeah, I love that. You were telling me about that He's
the
director,
yeah,
right?
Darren Aronofsky, who I was saying to Sharif earlier, I thought was kind of a strange choice, or at least for Elon to be excited about, because this is the guy who did Black Swan. This is the guy who did Requiem for a Dream. He likes doing very gritty films with characters that are not necessarily like super likable, but they're all very intense and obsessive. So I guess, you know, I mean, I think it'll be an interesting film. I think it'll be really interesting to see who they cast as Elon. But if Elon's happy with Aronofsky, I think it'll be a really good movie.
Yeah, I wonder if he's going to have a say in who gets to play him. But
I think imagine him not having a say.
Probably, yeah.
I think he would have to have a say. Yeah.
So Tesla, guys, moving up big over the fact that a British company is going to expand or buy their supercharging infrastructure to expand their charging infrastructure there in England. I believe 20,000 stations or 20,000 charging units is what they want to expand to from the 600 they currently have. So it's another company that's going to adopt the North American charging standard, which is now Tesla, in addition to BP, who also announced last week they were investing umpteen million amount of money into expanding or buying Tesla's infrastructure there. So it was BP, British Petroleum last month, and I forget the name of the company. It's the company that owns Asda, the supermarket in England. Anyway, so Tesla up 4.57%, and we're about to knock on the door of that 225. We have a 224.49 high. Ram, come to the screen if you're able to. Here we go, 224 and 2/3. Tesla absolutely rocketing up. We're about to hit 225 any second now. 4.75% to the high side. You in that? You're in that, Katina, man?
The candle just grew as you mentioned it too. It
yeah,
literally just got higher. Oh, I love that animation.
Yeah, right? Cool. He's on a burro.
Oh,
is that a burro?
Oh.
Well, that's a bear, obviously.
I like that the bull leaves money and then the bear is releasing it with the roar. It's cute little animations. Yeah.
I like that. So Tesla absolutely rocketing up today, guys. Google, also a V-shaped recovery, but still negative on the day. We're down about 0.25% on Google to go green. We got to break through that 132.60-ish area. We're not far away from there. We got a 132.41 high, so we could easily see that by the end of the day. But the NQ now almost green, pumping back up off that 15.465 bottom. Guess what? We're 110 points higher now. We're at 15.575.
Oh.
Here we go, baby. 15.601, and we go green, Adara. So that, again, we closed very much near the highs on Friday there. So, you know, the higher end of the range we're going to have to make it up to. And then NVIDIA. How can I forget NVIDIA? Traded this one, I don't know how many times last week.
Yeah, you did so well with NVIDIA last week.
It was a good one. It wasn't really me. It just kept rocketing up, right?
Did not want to stop.
Yeah, it kept moving up. Now, guys, big meeting this Wednesday. Biden and Xi in San Francisco. That is going to be big for GPUs. It's going to be big for a lot of other industries as well as we look to calm the geopolitical tensions between the two superpowers. Make sure to be with us on Wednesday because I guarantee you there'll be some stuff moving. Maybe chief among them will be NVIDIA. We're going to have to wait and see, not making that call yet. But here we are, 490 Adara on NVIDIA, a bit of a triple top there right now, looking to break that. But we've got higher highs. Higher lows, pardon me. We trough out there 480.99 on the day. We're already $10 higher than the low, right?
My gosh.
We make a higher low right off VWAP, exactly off VWAP at that 486, and then we're knocking on the door of that 490 looking for a break. Maybe we see 500, who knows? So
we could. Knowing NVIDIA, we very well could. And just how strong this market is too. Like, it's not like NVIDIA is the only one running. So I do think we have, and especially with the news with Xi and Biden meeting in San Francisco. One of the articles I saw specified the Bay Area, which is cool, and so San Francisco on Wednesday. So yeah, I think that'll be really interesting. Also, because I forgot earlier to mention the Hayes records that super chat earlier, scalped Amazon 140C at 233 to 255, and it peaked at 360. Yeah, I mean, just thank you again for the super chat. Sorry we didn't get to it earlier. This looks really beautiful. Like, we've kind of broken out of where we were at pre-market. Amazon, nice little V shape here, looking, I would say, pretty nice, like right basically from open. We were down a little bit pre-market, but from open, this has been a gorgeous climb to the upside. We're just about 0.3% to the downside. We could very much break above here and break to the upside for sure. This is a very nice looking chart, and congratulations on your trade. Yeah.
Yeah,
Thank
absolutely.
you for the super chat.
Not able to break that 490 yet, but keep your eye on that 490. No question about that on NVDA. And we all know that this one is likely going to march its way up to 500. We haven't been to 500 in quite some time. I believe August we broke through it. But again, the closing prints all just a smidge below that 500. Like, look at this day. When we actually opened up above 500, we opened up 509. Look what the day ended up being. It ended up being a closing at $468 type of day. So no question about that. The 500 level has been a level of resistance, whether it was broken, you know, on an intraday basis or not. So make sure to keep your eyes peeled for that on NVDA. Yeah, and then Apple definitely having trouble at this 185 here, guys. If the market starts turning, I'm going to be definitely looking at Apple as a short at 185. It's not really
able to... It's very shortable, yeah.
Yeah, it does. You know, right now it's finding a little bit of support at VWAP, but I got to tell you, this is looking like the weakest of the bunch, down 0.75% of Dara on the day right now. So AAPL, not strong. All right, some people were talking about JBL. We're going to look at JBL real quick here, Adara. JBL. Jabil Incorporated. Don't even know what's going on here, but a nice move up.
I'll look it up.
I can find it.
Oh, okay.
It is, they provide comprehensive electronics design, production, and product management services to companies in various industries. They have an electronics manufacturing service, which they call EMS, and a diversified manufacturing service, DMS. Is there a headline? I don't see a headline.
No, I see. The most recent I see was it acquired a company last week. Yeah, Retronics for eco-friendly manufacturing, but that's a week ago.
Exactly. Yeah. That comes November 6th, and it's running from there. Let's have a look at the daily. Well, there you go. We get that November 6th, the big move down. It moved actually up on the 3rd. It kind of opened up at that 125 and then had a 129 resistance level. But yeah, moving up nicely. With respect to data on this bad boy, 124 million shares. So it's larger. It's a larger float company, 16.72 billion, definitely bigger. And I got to tell you, the volume on it, suspect today, there. Even though the chart pattern looks fantastic, we've only done 350,000 shares.
I just noticed that too. I was going to say the volume on this one would make me a little bit not super enthused to enter.
No.
I would say for myself. Also, the spread for a stock that is not that expensive, the spread is like 12 cents. And I know sometimes I will dabble with the, you know, the Eli Lillys, the Netflixes, the Lululemons that do have, but those stocks are a bit more, and this, you know, like, so you have a bit wider of a spread. But yeah, with a stock that is not super expensive with a wider spread and the volume as it is, I probably would not go into it. Yeah,
I respect that. I definitely respect that. NVIDIA did break 490, but again, guys, you know, we want decisive break, not a quick perfunctory break touching 490, 44 or some random area. We want a decisive break and hold above that level. I'm talking about NVDA and the 490 level. We're below 490 again, surprise. Keep your eye on that one. But the NQ, it looks like it is setting up to go green on the day, as we are just like a few points here away from the Friday close. Okay, guys, we're going to open it up to some questions. Try to keep your questions on point with respect to risk management. They can be for Adara and I. Put them in. Tag us, guys, by hitting @ and then typing our name. I know if you're on mobile, you got to type in the full name. So if you're watching, yeah, it sucks. I hate that.
I didn't know
So if you're watching on your cell phone and you're on YouTube, you got to @ and then you got to type in the full name. But if you're on the computer, you just hit @C, for example, and then it'll show you everybody who's got a name with a letter that starts with C, and you can scroll down and choose my name or choose Adara's with A.
Yeah.
And we've been more than happy to answer your questions. What about AMC, says Vitali? We're not going to look at the specific stocks, guys. We're going to look at specific principles, so ask us something about what we were talking about today. Sharif, is it really your birthday? No, it is not my birthday. Sean.
What is this? I feel like I missed this. Was it your birthday?
I don't know what. What was that? It's a whole, yeah, okay. So it's an inside joke going back to Luca when everyone would call happy birthday Luca, and then we would get like thousands of dollars worth of super chats for Luca's birthday. And it didn't make any sense then. It still don't make any sense
so
now.
it's a weird midday thing. Okay.
And then I got Ram in the chat calling me a liar. Basically, she's like, it is. He's lying.
She's getting involved in the drama, yeah.
Right? All right, guys. No, not yet. Not my birthday yet, man. I already added another digit to my my age. I don't want to add another one. All right. What's it? Take a look at Lucid. Almog. Almog, my friend, I would not mind looking at Lucid, but we want to talk about risk management principles. If you have something specific to ask me about risk management principles or Adara, please tag us in the chat, and then we will be more than happy to answer your question there. Yeah, you want to have a look at something while I read through the chat here?
Yeah, for sure. I mean, in terms of like levels and risk management, we can look at, because I was mentioning earlier sometimes, and so was Sharif with regards to the meta levels. Sometimes it's really tempting to get into a stock that's doing super well, and you have to think about levels before you enter. An example with that is Tesla. So Tesla, we briefly broke 225, but now we kind of couldn't hold 225, right? But we actually saw Tesla do the same thing when we initially kind of broke this 221 area, right? Or to a lesser extent, when we were dancing around 220. So sometimes, you could actually have an opportunity for a dip buy at these higher levels. A good risk management principle might be just waiting to see if we do have a situation like, I'm going to zoom in a little bit here so we can see, like when we had sort of this, I guess, double bottom on a very short term at this 222, because I was watching while we did this. We went up to 223. We barely broke 223, and then we, went swooping back to the downside here, right? So, maybe if Tesla, you could probably enter around, like if we see nice support around 224, assuming that this is kind of, it wants to continue going higher. And then if not, if you see it decidedly break 224, then from a risk management perspective, you might say, is the time come for a retracement? Is the time come for a short, right? So I think it's like looking at levels from a risk management perspective and then seeing kind of when to judge your point of entry. And I think Tesla today is a really good example of that. Because we've seen a couple times here, we have like this kind of double candle situation, and then we'll go back to the upside. So if Tesla can hold above 224, then you might see, based on what's been going on throughout the day, risk management principles, you might think, oh, it makes sense to go up for another long here if we can break that 225. That little bit of food for thought there, using this stock as an example. Yeah.
Okay, some really good questions coming in here in the chat, and I thank you guys for that. It means you guys are engaging, and I couldn't appreciate that more. If I say your name wrong and I butcher it, I'm really sorry. I'm doing my best. I'm not much of a pronouncer. Bondhi, asking, how do you deal with volatility in an uncertain market? That's a good question, because, at first glance, at first instance, you're like, yeah, I think trading in an uncertain market is more risky. Well, yes and no. If your trade plan is followed to the T, if you know where you're going to get in, what your risk to reward ratio is, and you have a certain out, it really shouldn't matter. Now, it may matter in certain instances, because if the market is really volatile and say you have a 10-cent spread between your trigger price and your limit price, and that gets blown through because it's such a volatile market and there was a liquidity gap there was an area of illiquidity, that could present you with some problems. But if without that specific nuance, it really shouldn't make a difference trading in an uncertain market, because you have a certain plan, you have a thesis that Meta is going to be strong on the day and you want to take it off 330. But if Meta breaks 329 because you've earmarked that 329 level as the lower low and you place your stop there, it really shouldn't matter if Meta goes to 325 that day, because you should be stopped out at 329 and you should only be on the hook for $1 a share loss, okay? So that's, again, in theory. Now, whether or not you end up not taking out the whole thing, taking out half, or getting back in, not allowing your stop to trigger because you're stubborn, you'd be surprised how many people would probably, reluctantly raise their hand, and I'll be the first to raise my hand. Absolutely. So many times I've not allowed my stop to trigger because I was stubborn. I thought I knew better than the market. I didn't want to give up the L. I didn't want to take the hit, and I let it run. I dollar cost that average in, only to be slapped in the face and to be taught a lesson, and that's just the way it is. And you'll do that, you'll be taught a lesson, you'll learn it once, twice, and oh, be thrice. Trust me, and your account will make you pay for it. Yeah. All right. What's the other one here? Very good question. Patrick Langlois, I think, our French-Canadian friend. I think he's Patrick. How do you manage risk management with cash account versus margin? Stop loss affects buying power. So I'm not really sure I understand. So how do your stop loss affects your buying power? Huh. Why? Because it's a separate order and therefore you have to actually have the cash? No, I disagree with that. I'm pretty sure that that's not the case. So there really shouldn't be a difference between your approach to losses in a margin account versus a cash account. The only really difference is you're not going to have, for example, IBKR gives me 3-to-1, right? So if I have $100,000 in my IBKR, for the stocks that are required 30% margin, I can buy up to $300,000. And then there's also the T+2. So essentially the reconciliation of the trade, right? So if you have a cash account, you can't spend, once you're out of the position, you have to wait 2 days for that trade to clear before you can re-spend the money. I think that that's what you're talking about. I don't think that that affects your out. You should be able to exit the long position or the short position, irrespective of whether you have a cash account or a margin account. I'm 90% sure on that, but I haven't had a cash account before, so I'm not 100% sure with respect to that as well. You had something to say there, Dara.
Yeah, I did. I was thinking too, it's interesting just talking, in this regard to the last question as well, but with, and that, I'm trying to, now I feel like I was so into the last question, whatever. But yeah, basically, that with the conversation about, I guess like when to kind of be stubborn about stop losses or not. I've had the opposite sometimes too. I know last week I did this a couple times where I was really worried that a stock would go down and I didn't listen to, like the levels and the risk management that I had planned ahead of time, and I got out too early and then we ended up going back to the upside. So an example was I got in really early on a Tesla long and got rid of it and lost, and then it went back to the upside, right? So I think sometimes it's a combination, I think, of just holding on to where your levels are. And so that prevents you from, losing more than you should, but it also prevents you from losing in situations where if you did listen to your risk management principles, you could actually win out, right? So I think it's kind of interesting, kind of works on both sides, I think, yeah.
Okay, yeah, I see some of the suggestions you guys are putting in the chat, and trust me, we'll make a note of all of them. Obviously, today is the first format for the show, and so, it's kind of like a work in progress. We'll figure this beast out. Ashley goes, Adam Deleuze, how about that 3-1 dub, baby? Arsenal back in second place, well, third place because we're tied with Liverpool now, but we're only 1 point off City, and how about that game? 4-4 City, Chelsea. That was a hell of a game. I was cheering for Chelsea like you wouldn't believe. And that's the first time I think I've ever cheered for that West London team, who I'll probably never cheer for again. And anyway, Adam, with risk management, would you consider looking at multiple indicators and have a trailing stop, or are you more interested in levels such as price action, support, and resistance? Look, you're absolutely not wrong. If you're going to base your entries off indicators, then I think that you should probably base your stops off indicators. But if you're going to base your entries off price action, I think your stops should be based upon price action. Personally, you know how I roll. I like a trending stock. I don't go against the trend. If Meta's strong, I'm going to be looking at getting in above a higher high or on a pullback, but above a certain level. And so for me personally, my stops are based on intraday price action rather than maybe say, VWAP or the 50 EMA or the 200 EMA. But I think if you're going to follow that principle that you're basing your entries off there, your exits should be based off there as well. That's just my humble opinion.
Oh, that makes sense. So whatever you're basing, basically base them off the same thing, right? So whatever you're using to base your entry, use that metric to base your exit. That makes sense.
That's what I would say, yeah.
Thank you.
So shout out to Adam for that. Eric, a piece for the dream. When do you wake up? I swing days. Usually the piece is so small I don't care if it goes break even on that piece, but wondering when do you just walk away? That's really good. I think that that's really going to be up to you here, because a piece for the dream is, it is what the name identifies it to be.
It's a piece for the dream.
It's a piece for the dream. So let that bad boy run. And I don't have any fundamental rules that I follow for holding a piece for the
yeah,
dream.
Yeah, I noticed it seems to be kind of like, it's just a choice.
Let it go, baby.
Yeah.
Yeah, no, I don't have one for you there, Eric. I'm sorry, but you're gonna have to figure out where your dream is and how long you're gonna have to hold that piece, my friend.
What dream you have, yeah.
We're gonna keep going down the list here, guys. The NCSU kid. Okay. I'm looking at NVIDIA, would do a 2-to-1 play, be short to 485 and out at high a day. Okay, obviously he mentioned that a little bit a while ago. So, and what he's looking for is he wants to short at 485. I'm looking at NVIDIA would do a 2-to-1 play, be short to 485 and out at high a day. Say that again, Ram. I know. Yeah, I remember that. By the way, guys, money talks, no money talks for a little while. We will have a revamped money talks soon. We'll give you more information about that. But for today, we're not going to have money talks. All right. So looking at the NCSU kids question, yeah, absolutely to 485. Why does he choose 485? Well, it's staring at you in the face. Look at this trough over here. Number one, it's a trough. You have a double bottom. Number two, it stopped at VWAP, right? So it's clearly looking at that level for a reason. So what he's saying is, let me get short into here. Let me go as bad as it can get, which in his opinion is that 485, 485 and a half. But if it goes against me, I'll get out at high day. Sure, that what you're saying makes sense. I just don't like your entry. You're halfway. You're in between 490 and you're in between 485. You're kind of no man's land, no woman's land. I would look at getting in at the extremes. I would be looking either for a bounce off VWAP on NVIDIA, which is around 486 and a half for a long, or I'd be looking to get short at 490 with a high a day stop. In this case, it'd be a 490.44. That's just how I would do it. I think being in the middle here doesn't help you. Right, because you're go ahead.
No, that makes sense. I'm just I think I get, because it's like you don't want to kind of waffle around, right? If you make the most of the trade, it's better to be at the high or the low point.
There you go.
Yeah.
All right, so I hope that helps the NCSU kid. William, I can't see the end of your last name there. FCell double bottom, $1 looks ready to run. Thank you very much for the $1.99 super chat. Let's have a look at our friend Fuel Cell, which is no friend of mine, but shout out to Alfred because he rode this one back
Alfred,
in.
Alfred was trading FCell.
Oh,
okay.
this was his what he calls playing dice behind. I can't even say it because it's kind of like it's racial.
Yeah, I know
he can say it because he's Asian, but I can't, so I'm not going to say it. But anyway, he says playing dice behind some sort of restaurant there, essentially basically is he's gambling with FCell, and he gambled big on this one, and it absolutely printed for him. Let's go to the FCell over here. So first and foremost, daily. We're going to look at the daily here on FCell, and you guys get it. It's a bad chart, right? Very bad. Are we at all-time lows? Let's go to the weekly. Let's just figure out where we are.
Oh, it's like really trailed off here, yeah.
All-time lows, Adara, no. We got to go into that 20, we can go into 10-cent area back in July of 2019. We were even lower. So we are very close to all-time lows. We have $1 exactly today is the low on the day. And surprise, surprise, that held. Yeah, can you believe that, Neil? $1 low a day, baby. A bit of a 2 touches there on the 5-minute here on FCell at $1, and it made its way back up to $1.07. We're at $1.05 right now. He says double bottom out 1, ready for a run. Sure, you're gonna have to size in very heavily into FCell in order to make a substantial amount of money off 5-7 pennies, but do you, man? 318 million shares done on the day, so there's ample amount of liquidity for those big size movers. I haven't looked at the tape, but, I haven't looked at the book, so I don't know how much size is sitting there. By the way, $1, we broke the low of Friday. Let's go to the 4-hour. Let's just see if we had any prints below. Well, yeah, we did. We did. Back on October 30th, that day we had a really red market. We got down to 98 pennies. And, yeah, so we have broken that dollar. Albeit, look at this. Look where the closing print is. North of that dollar. So even though we had a perfunctory intraday break of that $1 area, that the committed money is the money that stays after 4 o'clock, okay? It boosted it up above $1. So definitely we have support at $1 there. Let's keep going down and see what kind of questions people are asking. Sharif, thank you for noticing my message about RM. I always have a problem that I don't know when to get out of the trade, even if I keep losing. I know, look, man, you are not on your own. You trust me, you're not on your own. I can't tell you how many times I've DCA dollar cost average into position, all the while knowing you should be getting out, and if you really want to get back in, you should be reinstituting at an entirely different level. So that's just me right there. Let's see what else people are asking here. A person with no name. What does risking 3-to-1 mean, for an example? Sure, let's talk about that again. You wanna try to explain that?
Yeah, I can. We'll try. We'll see what we do here. So basically, it's, and I could be wrong here, but it's like, so basically, if the risk is 3 and you're doing 1 to 3 or 3 to 1?
3 to 1.
3 to 1. Okay, so
first start at your entry.
Okay.
So you want to pinpoint your entry first.
Let me pull up an example here.
Yeah.
I'm just gonna let's grab Tesla. I like Tesla. We'll grab Tesla. So so if you were to enter kind of I guess like a long here, like now it looks like it's retracing, but we'll kind of ignore that for now. If you're trying to enter a long here, I guess you would kind of you'd want to plan where you have like a little bit of support, right? So honestly, Tesla at this whole dollar level actually has been pretty solid throughout the day. So you had like a 214 possibility. You had a it's around 216. This 220 was pretty strong, 222, 223. So yeah, I think like, I'm gonna try my best here. I think you basically want to plan an entry where you do have, you've tested it, you have some kind of support. That would be the first thing. And so then basically you have to plan how high could it go and how much are you willing to, to get for your reward here based on where you enter, right? And then the risk would be basically like what are you willing to give up should the trade go awry, right? So basically, if your risk to reward is 3 to 1, you're basically willing to risk 3 times the amount of your reward. So that's kind of a bit high. That's usually what it would be, as far as I'm aware. If your risk is 3 and your reward is 1, then you're willing to risk more, right? Okay, so that makes sense. So that would be, yeah. So it's like if you want.
Can you ask that again?
So if it 3 to 1 risk to reward ratio, you're risking more, right, for less gain, or no?
No.
Do I have that the opposite?
It's just a formula that you say to yourself.
Okay.
And it's because so if you're gonna adopt 3 to 1 risk to reward ratio, essentially you need to do it every time.
Oh, I see. Okay.
And the reason is because the math suggests that if you allow your potential to hit 3. So if we get into Tesla at let's say 215, okay?
215, yeah, okay.
215, and then we run that, we get it to 218, but we were going to risk to 214.
Oh,
there
we go.
Every single time,
yeah,
right? And you get out at 214, you always cut your loss at the 1.
At the 1, okay.
Right, then if you can actually be a losing trader in terms of the amount of trades that you take, say 60% of them, 63% of them can actually be losses.
Because you're going to win on the rest of them. Okay.
Exactly, so your hit rate, what they call a hit rate, can be lower, but you're actually profitable.
Okay, yeah, that makes sense, thank you. Yeah, I think it's like, because I think in my brain, for some reason, I had it like 3 to 1. It's like you're risking 3 times. But no, that makes sense where it's like if you can make 3 times what you're willing to risk, basically.
Exactly.
Okay, yeah, that makes sense. Then yeah, like something exactly like Tesla, you would kind of be able to enter. There've been really good whole dollar areas of support. Even if you wanted to enter at 214 with that support, and then this kind of, I mean, this would be a bit bigger, but like let's say your 212 is your area, so you're going to risk $2, and then you could go up to like 220, so that would be 3 times your risk, right? So there's, yeah, I mean, like, kind of this stock moves like crazy. This is kind of like an intense example, but yeah, just kind of basically to go over the risk to reward in real time. Yeah, it's basically the extent to which you're willing to risk compared to what you could gain from the trade. Yeah, there you go.
Okay, good. All right, Cameron McComb asking me if I see a huge volume candle on AAPL. No, I do not. Well. Sean short Apple 185, which is what we're talking about. 185 is an absolute resistance level today on Apple. He's 25 pennies in the money. Anytime we've come into that 185 level at all, sure, you got wicks into 185.15. So what? Look where the closing prints are. They're all south of that 185 level. That's not by accident. okay? And now it was straddling VWAP from the top side. Now it's rejecting it from the bottom side. So that's another variable that you have to consider here. Nice short, Sean. 184.70s here. We got a 184.21 short. I don't see a big volume candle today on Apple, by the way, and the volume on Apple anyway in general is 21.8 million shares. It's second only to, or third to NVIDIA and Tesla. Every other one has done more shares. Sorry, has done less shares. I'm talking about the other Mag 7. They've done substantially less. So Apple definitely does have more shares on the day, but intraday, not really. Okay. Yeah. So that is that's that in a nutshell. All right. So we've talked about planning your entry, your risk to reward ratio, your stops and your outs, and then your emergency out. The emergency out obviously is the easiest to understand of the bunch. So.
Yeah.
Yeah, so that's how things are looking. Let's see if we can get in some trades now. Let's see what we're looking at here. Yeah, we're rejecting off very much close to Friday's closing price, Adara. We got into 15,590 on the NQ, and we had a essentially 15,597 close on Friday. So very much closing off or bouncing, rejecting. Yeah. Off that that closing print on Friday. Fee rhyme with AMC. Sharif, is it best to always move stop to break even? No, no. The market doesn't give two flying you-know-whats about where your break-even point. It doesn't care. And the Katina Man is printing on Apple, so keep your eye on that, guys.
Nice.
And $1 in the money on AMD as he's short 117, and we're getting down to that 116 area for the Katina Man. By the way, guys, AMD relatively weak today when you compare it to NVIDIA, down 2% for AMD, NVIDIA up 0.8%. But to go back to fee rhyme with AMC, the market doesn't care where your break even is. Put your trailing stops at areas where it makes sense. So if you're continuing to ride up, put it below the trough. So in this case, let me give you an example. Here on NVIDIA. So let's say you got in at 486, okay? You had a big move up on NVDA from 481. The opening print there. You got all the way up to 490. You reject 490. You come into VWAP, okay? You come into VWAP, and then you wait, as Neil likes to say, to get it on the back end to make sure that that V starts to develop, right? So you've already made a move down. Now you're finding support at VWAP, and you're moving back up. Getting it on the curl here is what Neil calls getting it on the back end. So say you get in at 487, right? And then you rode it up to 490. You take out 3/4 of it at 490. It starts to come back down. You got in at 487. The market doesn't care that you got in at 487. The market cares about this newer low. So in my opinion, your stop shouldn't be at the 487 unless you have another reason for it. Your stop needs to be at this newer low, which in this case is a break of 486 around 485 3/4. So just keep that in mind. Anytime you want to place your stop at break even, Sharif is in your head saying the market doesn't give a you-know-what about your entry. It doesn't, right? It cares about the actual price action. So in this case, if you were to get in, again, 487 on NVDA, it would be the break of 486. Adam, you put in your question twice. I'm talking about Adam DeLuce. I answered it. I hope you heard me answer it. If you didn't, you can go back and listen to my response to your question there. Shout out to Adam and the 3-1 victory by Arsenal, baby.
Hey.
It was a great week to be an Arsenal Cowboys fan.
Yeah, it sounds like there was like a lot of all kinds of football occurring over the weekend. The
North
American and the European. Yeah. It's football.
It was a great weekend. That's all I can say there.
Awesome.
Yeah, he got it. All right.
Yeah, okay,
awesome. Adam, thank you. Somebody else had something to say there real quick here. Kyle Burdett. Big Kyle. I hope you had a good weekend. My friend, he asked, got short ES from Friday high rejection. Shout out to you, Kyle. I mean, clearly that is a level. That's kind of what I'm talking about, guys.
Yeah.
Getting those kind of levels.
I was going to say it just kind of literally goes back to what you were saying with regards to like looking at the levels, looking at previous levels. So like a Friday, Friday high level, and then just kind of playing off of that. And also too, if you're working off of known levels, and I think this was like the big thing when I first started trading, is like I mentioned earlier, right? Like that willingness, or that, I guess not willingness, but that tendency, that kind of understandable tendency when you're first trading to just go where you feel the movement is. So it's like if you see something heading to the upside, you want to get in on that, but it's like you have to kind of wait and be patient and look at levels. So for example, interesting with kind of regards to what we're talking about, I just have Boeing up here because I saw mention of that one in the chat. It was on the watch list this morning with the Dubai Air Show and Emirates making a massive deal for some Boeing aircrafts here. I think it was 90 aircrafts, but yeah, so it's like, for example, like this, you want to look at levels, right? So I don't want to just get in blindly because we're going to the high side. We want to see, now we just broke that higher high. We're seeing higher high, higher high, higher high, right? So now if we kind of can see a consistent, decisive break above this point, then that would be a point at which you'd want to enter, right? So it's like using risk reward, like levels are important. If you want to use, like if you're going to use VWAP as your entry point, then also use it for your exit point, right? If you're going to use price point, like kind of what we were talking about, right? Like you can actually use the market to help kind of teach you these lessons. Because I think one thing for me especially is like hearing or seeing one thing is completely different than actually being in the market, getting to actively trade it, right? And look, like Boeing, it looks like the market might have, did the market kind of take a hit there, or was it just Boeing? Because Boeing had quite the wick down there.
Yeah, wick below 15,550 and then moved right back up. That's a warning when it does that. So let's keep an eye on an area of support. Not saying we're going to hold up here, but you know how I've told you this. Yeah, many times when you have aggressive wicks and then a big buy up like that, keep an eye out for a level of resistance. But we're still down the day. Yeah. We're still down 0.25% on the NQ, so we could continue absolutely trend, maybe even 15,550, right? Yeah. Who knows? Who knows? Good question here. Shakespeare, that's a sick name.
That's a great name.
SHKSPR, Shakespeare. We're going to call you William. When is a good time to stop trading when you already had a couple of winning trades and you are up like 1 to 2% of your capital? That's a very good question, my friend, but it is beyond the scope of today's lesson. I don't have a good answer for that. I'll tell you the truth. That's something that I continue to struggle with myself. When it really is the right time to cut off the trade, I don't have a good answer for that. But allow me to talk about it, talk to the big kahunas, see what they got to say. And I'll have a possible answer for you tomorrow on that. But yeah, thank you for asking. That is a good question. College team, come on, Ryan. Come on, Ryan. You know my boys will beat them. You know that. Ryan always hates on the Cowboys, but that's okay because Ryan's a good guy. Yeah. Let's see what else people are talking about here. Greed is not good, DJ Dubs. You're right. Greed isn't, but you're in this to make money. So yeah, you need an element of greed. No question about that. Corey says, I get out at 10% profit no matter what. It's nice to have an actual level because that's like a defined level, doesn't matter. I just, I think some people would have all sorts of FOMO leaving that kind of money on the table. But yeah, everybody's a little bit different.
Everyone has their own strategy.
BlackBerry, how important are higher highs, lows on the shorter time frame, 1 to 2 minute?
I saw that question too.
Yeah, I think that they're very important. Yeah. For me, especially for an intraday trend following system, I'm looking for higher highs and higher lows. I don't want to see zigzagging. If I see zigzagging, then I don't have a trade and I don't know where the hell to get in, where the hell to get out. I need definable levels, at least intraday. So again, coming back to this NVIDIA example because it's got some pretty defined peaks and troughs here, okay? If I was to get in, like I said, on the back end, as Neil would call it, at 487, after that 490 rejection, we come back down into 486, right? And then I get in at 487 to make sure that we're actually going to hold VWAP and it's not just a quick, quick bounce and then move back down. Now, for me, this peak over here gave me a definable level, right? So I know 490 is a resistance level. I also know that 486 is a support level. If I don't have a defining level off which to say, okay, if this price action comes below 486, then how do I know where to get out, right? So if you're going to adopt the, you know, if you're going to adopt this getting in at higher highs and higher lows thing, you have to follow it all throughout. You can't just get in on a hold of a low and then say, well, if it comes back down, I'm gonna get off that VWAP. No, you have to base it on how you got in. So it can't just change mid trade, right? So if you got in at 487 and you're gonna hold this for 490 break, then you're gonna have to wait until it actually breaks the trough over here, which is around 486, 485.75. So that's personally how I would do it. But you know, you may have a different approach there. Let's see what else people are asking. Do you have any good questions that you saw there in the chat?
I mean, I actually kind of have one. I didn't see it in the chat, but this is just a question that I have.
Go for it.
Do you find, and I'm sure the answer is yes, but I'm curious, do you find that your approach to risk management has changed kind of as you day trade more? And like do you find through experience, like you find better strategies that work? I guess it's kind of an easy question, but I'm
like the risk to reward ratio thing. I got to tell you the truth. I don't use it.
Okay.
Yeah. But I know a lot of people that do, and they use it with success.
Okay.
So that's number one.
Okay.
Number two, I've always known about it since I started trading. Was one of the first things that, you know, these learn to day trade books teach you.
Yeah.
The risk to reward. So I was always aware of it. Just because I was, though, it doesn't really mean I adopted it.
Okay.
With respect to my outs, this trend following higher highs and higher lows, and you know, looking for flat tops like ascending wedges, descending wedges. It's all stuff I kind of already knew, having read the book, but never really implemented, because you know, implementing what you learn in an IRL is completely.
It's not always the same thing.
Different.
Yeah.
Yeah.
That's interesting.
Right. Besides, when you're in like a swing trade, you have days and hours to
make your decisions.
To contemplate, right?
Yeah.
But when you're in an intraday trade, like you don't have that long. You know that, right?
No,
like
you really don't. You have to have, and I think that's why planning in advance is nice too, right? Because you can know the second it goes wrong, or the second you're like, I don't want to be in this, then you can act quick and get out, but you don't really have the luxury of panicking while you're in the trade, right? I mean, so that's why I feel like, especially the more I trade now that I'm planning my kind of outs and my levels of comfort in advance, it's been a lot less stressful for me. Yeah. I was just curious to see how it kind of changes as you trade, so that makes sense. Also, with regards to like the 1 and 2 minute question earlier from Blackberry, I mean, I have a lot of 1 minute and 3 minute charts on my side chart, because sometimes it's interesting just to kind of even see, like, is this moving in a way that's of interest to me? So for example, I have Meta on my 1 minute on the side chart. I know we keep talking about Meta today, but hey, it's been moving, so, and it's a mega cap. Let's look at, so we'll kind of show the 1 minute. So yeah, the 1 minute wicks on Meta are super interesting, and that's why I chose this one. Is you can kind of see, like, as we were kind of mentioning earlier, you know, Sharif was really helpful in kind of telling me that wicks that we see here that kind of don't hold up with the rest of the candle are really worth noting, because it can kind of show you the direction that, I'm going to zoom out here, I apologize, the direction that a stock might be going, right? So we see this 1, 2, 3, 4, like all of these wicks on this 1 minute candle to the upside, but the candle is still going to the downside. And so that kind of, to me, this says, you know, it's having a hard time getting support at this higher levels. We kind of can have this wick up to 331.4, but the rest of the candles are still going to the downside, right? So to me, this suggests that this stock is still heading down, at least for now, and especially like on the 1 minute mark. So to me, to see all that volatility in a very short time frame suggests that this stock right now, anyways, is having a retracement. So I think that's just kind of note, and I appreciated that question from Blackberry. So I kind of wanted to bring that up with regard to this. And if anyone has any more questions about, you know, risk management principles or anything like that, or any, you know, tips and tricks that they use, you know, we're here to have a discussion. We're here to learn. So I'm very much intrigued to see, especially because I'm very much still learning too. So it's, you know, really great to hear everyone's different perspectives on everything here. Let's look. Okay, this is an interesting one. Shane XYZ. Why do you guys have so many exits? What's your cost per trade? So I think we're more. I think like generally with exits, at least I can answer that question, that aspect of the question. I think it is more just kind of, you might want to not get, like, at least for me personally, and this is also a risk management related thing. So I think this is why it's a good question to ask in this, or I guess to answer in this regard. I think for me, at least, sometimes it's nice to have, if I have a trade going well, I might want to, you know, just kind of like have, as Sharif calls them, like beak wetters, right? Like I want to have a little bit out and then just kind of, you know, continue through the trade. Or if it's a position that I'm not feeling super confident, if I'm seeing a little bit of resistance at a certain area, then I might want to take out part of the position there just to kind of to relax or breathe a little more easily. And also, you know, that we were mentioning earlier too, Sharif was mentioning with stop losses, sometimes you might only put like, have a stop loss for like half your position, do you know what I mean, to kind of see how it goes from there. So I don't know if this answers your question, but I think with regards to exits, at least for myself, it does serve as kind of a risk management thing, right? To protect a portion of your position to kind of see how the trade goes from there. So that's why I especially like to have several exits for certain trades, just to kind of spread out your gains or you know, minimize your losses. Yeah, that's my take on that.
Yeah. All right. So I just went to get a quick drink of water. Preston H. How do you distinguish between a grab of liquidity, a false break, OB talks about that a lot, and a valid move? Banks are getting trickier and trickier by the day. Look, with respect to liquidity grabs, a way to mitigate for that a little bit is using the 5-minute chart and waiting for a closing print. Easier said than done, especially on a very volatile name. So for example, let's look at the NVIDIA chart over here. If we got a break of 490, Ram, come to the chart. If you got a break of 490 today, how many have we had? We've had 3. Let me just double check that. Yeah, we've had 3. We had a 490 touch here at 1010, a 490 break at 1015 into 490.05, and then you had an even bigger break into that 490.44. Look where the closing prints are. All of them are south of 490. So what if you broke through 490? There was definitely not enough committed money to keep that print above 490. So what I would say is to mitigate for liquidity grabs, wait for closing prints, and in this case, obviously you want to use the 5 or whatever time frame you're going to use. Just, you know, it shouldn't be the 1 minute time frame, because you're going to get a more distorted picture on the 1, because you know you can get a closing print above 490 on the 1, but on the 5 here clearly distinguishes that you didn't. So I would say use a longer time frame, or sorry, a bigger time frame, a 5, a 10. OB uses the 15. He's talked ad nauseum about the 15.
Yeah,
right?
I always hear you talk about the 15. Yeah.
And I mentioned to you guys already at the top of the show, I was talking to Steph on Friday. She charts off the half. She gets in on the 5. It's a multi-time frame type thing where you can basically base your trades off multiple different time frames. We're going to talk about multi-time frame confirmation on a different day, not today, and we'll get to it. But what I would say is mitigate your risk by waiting for the closing print on a higher time frame. I think that would help you, Preston. I'm not exactly sure how you trade or what you trade, but that's, you know, what my suggestion, just without knowing more, would be. So I'm just going down here and looking at some of the other questions. Sorry, there's just so many. Yeah. Sudhakar. Do you have any plans on options? How do you manage and play it? So I don't trade options. And I got to tell you, with respect to options knowledge, I suck. I know a little bit here and there, but I don't know them you know, quite as well as some of the other guys on the floor here. They'd probably be able to run circles around me with respect to options. So I'm not going to answer any options questions, but I should probably tell you that Day Trade the World likely will have 0 days to expiry options, and we will likely be able to trade them on the show. So more coming on that, and we'll have more for you. The Skips 8. How do you deal with a string of losses, preventing yourself from revenge trading? Now we're getting into some psychology stuff here. Okay, and I got to tell you, there's really no easy answer to this. It's going to be repetitions, and you guessed it, more repetitions. Essentially, screen time. You want to make as many, well, you don't want to make the mistakes, but you're going to have to make the mistakes. You're going to have to feel the pain. You're going to have to feel the frustration. You're going to have to reflect on those lessons over and over again. Some people more than others, but you're going to have to go through the learning curve, the growing pains, in order to kind of weed that out. And on the top of the show, I mentioned, you know, very anecdotally, when I got into this game, I heard, look, dude, you're not going to be a good trader unless you blow up a couple of accounts. You got to take a couple accounts to zero, right? Well, we'll see about that, right? I don't necessarily want that to be the case, but that's part of that whole anecdote, is that, you know, this revenge trading, usually you're blowing up accounts because you're DCAing, dollar cost averaging, into something you shouldn't be. So you're holding something way past your stop that you shouldn't be, and you end up getting, you know what, in the face there. So I hope that helps. Did I scare you there?
No, I was just, yeah, it was, I think it was effective. Right? It showed the
I scared the Chilean nightmare back there. No, I did. No way the Chilean nightmare got it. Steve Childers. What's going on with the Amazon at 143? You want to have a look?
Yeah, let's look at Amazon at 143. Hello, Amazon. How are you? I haven't looked much at Amazon today. Amazon at 143. Okay, this is interesting. So we I was mentioning earlier too, kind of approaching that 143, that we were seeing this really interesting kind of V-shape movement to the upside here. So we got down to this low of like 140, 80-ish, and then we had this really nice solid movement to the upside. And I was noticing it'd be interesting kind of to see us with this higher high dancing around where we were earlier, which is kind of just around that 143. We've broken 133 and then we kind of headed down. So I think it looks like we're having a little bit of weakness staying above that 143. Also with regards to what I just mentioned too, with these wicks to the upside that we're not really seeing fulfilled, to me this tells me that we can kind of have brief movements up here back to this 143, because we do see a lot of wicks into 143, at least in these earlier 5-minute candles. That shows to me there's not a lot of support at that level. We're seeing attempts to get that support, but the candles are still headed to the downside, right? So I think to me it shows that 143 might be a bit of an area of resistance, at least intraday. And I want to look at the day now because I'm trying to practice getting more charts involved in my looks at levels and charting. See, I know it's interesting. Let me see. Let's look at 143 here for Amazon. 143. Yeah, so we've kind of been dancing around. I feel like we're having a hard time getting decisively above it. We did have this day here, we kind of touched 143. We had, when was this? So September 13th. We had a nice long run above 143. Other than that, I feel like it's definitely a point of interest for Amazon. We did have some decisive movement above it on Friday. But yeah, it looks like, I would say what's going on with Amazon 143, it looks like it might be an area of resistance. I think breaking that, especially if you look at kind of the intraday, what we've been doing, I think breaking that area could be really important. It looks also, if I were to like kind of move back just from where we were at open, because this was some pre-market movement, it looks like we're kind of having this retracement pattern, right? Where we had, if you purely look at what we're doing from open, this like 935 candle, we are having movement to the upside. We kind of peak at 143 and now we're trailing off. So to me, it looks like we could actually be having this kind of Christmas tree-ish retracement shape here on Amazon. So it looks like 143 might be a bit of a resistance point for now. That's my take. Also, I saw a question earlier from Elon with regards to risk management for me that I would like to kind of mention because I thought it was interesting. What makes you convicted? I like the word, I think maybe convinced, but also I love the use of convicted here. To do a counter trend when safely we should do trend trades.
And you and I talked about this.
We did talk about this. Yeah, we had this conversation too about the mean reversion. Sharif and I were talking about this last week, mean reversion trading, where it's like the idea that you kind of, and some traders are able to do this successfully and others aren't, that there is the, you think, oh, if something gets to this level, if we can go kind of off the average, if we go off this point, then we can, go higher and we can kind of trade counter to what we're seeing, but that's not always successful, right? That's not a feel-safe trading strategy. With me specifically, I know sometimes, and I see some people being like, oh, like, especially, I'm going to use a specific example because I know me shorting Eli Lilly on Friday was one that I know some people were kind of, I think understandably kind of confused about, and even, I'm going to see if I can pull, yeah, there we go. Okay, so this one specifically, I was super playing the ranges here, right? So I know even though we were up on the day on Eli Lilly, I had said basically my plan was to kind of short it until we go back to the high side, and then I'm going to go long. And this was my plan. I was like kind of, and I stated my reasons for doing it. I wanted to kind of go up and down, play the ranges here. And so that, I guess my reason, and I'm not saying that this is like, this is just something that I'm more comfortable with doing. I am not super comfortable being in trades for super long periods of time, right? So I like to kind of take my profits where I can. That's my personal strategy. And with regards to risk management too, I think part of it is understanding what you're comfortable risking, right? And what you're comfortable being in with a trade. So I think to answer your question, I think for me, the reason I would kind of trade counter trend, so for example, my decision to short Eli Lilly here, even though we were up on the day, is because I was noticing this, this consistent patterns of we were having higher highs. I knew it was still going to be a long, but I wanted to kind of short until we got to that point. And this is a really successful trade for me. This probably was my top trade of the day. So I think like sometimes I was willing to do that because it might not have been the trend on the day, but it was the trend in that moment and it paid off. So I don't know if that answers your question, but I thought it was a cool question that I wanted to address. And then of course the other aspect of that is mean reversion trading, which is like, a little bit riskier and definitely not for everyone. But yeah, that's my take on that question. I think for me, I guess there's a difference, especially because I like trading shorter term, between what's counter trend on the day and what's counter trend within the range.
Yeah, well said.
Thank you.
Bert 666. I hope the 666 is not indicative of something, but oh my just God. Kidding there, of course. How do you figure out what percentage of total tradable amount you will be using on a single trade? So here's what I'm going to say. So there's really no hard and fast rule for that, but I would say it's entirely based on market conditions. A day like Friday, right? When we had just an absolute rocket ship to the high side, both on the NDX and the Mag 7. Obviously, usually they move together lately anyway. That would be the day to kind of scale up on the longs. In exactly the opposite fashion, remember how Halloween was on the 31st? That's really when to scale the shorts, when you have a lot of blood and I'm not just trying to say that there's one day, but some days you'll get the feeling, oh, okay, this week we're up 4% on the NQ. We've had multiple good days. We just had a red day yesterday, so we had a healthy pullback. Here comes a possible a next green day. Scale up when the market kind of gives you the hint that the volatility, not just the intraday volatility, but the direction of the trend is there, whatever way you're going. I hope that helps. I don't really have an exact rule for that, to be quite honest with you, but I do have a rule with how much you want to risk on the day, and based upon how much you're going to risk, that kind of determines how much shares you get in. So how many shares you get in, I should say. So hope that helps, Bert. D-Loaf. When your entry isn't the best, you dollar cost average, then still within your window, and then your thesis starts to play out. How do you avoid paper hands in that case, as you weren't happy to begin with? That's a very good question. And I would say make it based upon the level. So in this case, did you have a planned dollar cost average? I mean, that's the thing. Are you doing it because you didn't want to get, you didn't want to take an L? Like Arun, when he would come on the show, he'd be like, look, averaging in is part of the plan, or is good if it was part of the plan. So for example, if I wanted to get in, let's use NVIDIA again here, okay? Here's the 5-minute on NVIDIA. I wanted to get in at 486, okay? I get in at 486 on the dip, right? It comes right back into 486.75, but it doesn't break 486, right? So in this case, it's continuing to run back up. So I would be interested in another ad right at this area over here, leaving my stop in the same area. I think where you get in trouble is when you dollar cost average, you DCA when you don't have a plan to DCA, right? And then basically what you're saying is you didn't have a plan, you got lucky, it ended up going in your direction, and now you don't want to paper hand the trade. I think that that's the wrong thing to be looking at to begin with, because if you're DCAing when there's no plan to DCA, then I can't help you fix that, because that's just incorrect to begin with. But if you're DCAing at planned areas, like how many times have I said on the show, if I believe in this 486 level as a support level, why the hell am I not adding? And I would answer my own question and say, because I'm a bad trader, right? But you really should be getting in at those areas, especially in cases where they make higher lows. So in this case, you have a 486.85, and on this retracement, you only had a 485. 486 over here, sorry, 485.86. And in this case, you have a 486.75. So you don't have quite, you don't even come back into that level, the 486 level. So you should be adding here if you actually believe that this level is going to hold up and we're going to get an eventual break of 490 on NVDA. So I think that the question is, I don't want to say the question is wrong. There's no such thing as a wrong question, but I personally wouldn't dollar cost average if there was no plan to dollar cost average. Only if you had multiple levels that you liked and you say, okay, you know, I'm going to get in a quarter position at that 486 dip. And then I also like 485 over here because 485 was a bit of, come to the chart, Rammer. 485 was also a resistance level over here. So I'm going to put in a quarter position at 486. And then if it makes its way down into 485, I'm going to put in another quarter position. But I'm going to get out of everything if it breaks 484. I'm just giving you random numbers here, okay? If that was the plan, then that's what you should execute on. But don't get in all 100% at 486 and then it goes against you and so you DCA and then you get lucky because it runs back up and then you ask, well, how do I not paper hand the trade? So I hope that helps. Don't DCA if you're not planning on DCA. It was part of the plan. He said just did on shop short, seeing resistance between 61.88 and 62.33, but I wasn't patient. Got in too early. Now took is that a dollar win as NQ was pushing, and not long bias. Well, there you go. I mean, if you've got the levels and your dollar costing average in the levels, it's just a matter about, you know, letting it unfold. In the same case over here, like I'm talking about NVIDIA, it's not at 490 at the moment, it's at 488.5. If I really believe in 490 as that, you know, we're gonna get a triple top or whatever, quadruple top, I need to exercise patience into 490. Otherwise, there's really no way around that. It's just gonna be packing your patience, sitting on your hands, putting in the stop, walking away, whatever you really have to do for it to mechanically work for you.
Yeah, that makes
right?
sense, yeah.
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 Oleg, question, regular short versus ETF leverage, or regular short, I think he means, versus ETF leverage short. Shorting crypto scam and balancing if do not go safely with ETF like BITO, I think he means. BITI or is it BITO or BITI? I don't even know what BITI is. Oh, there is. BITI, Pro Share Short. I don't know what your question means, though. Like, what's the difference between a leverage ETF short and a regular short? I don't think that there is a difference unless you're seeing something on the book that reflects it. Obviously, you know, the leverage ETF, it's going to pump more, but I don't think that should affect the price action on the chart. You should already have your entry, your out, all on the chart, knowing exactly where you get in and whether or not it's leveraged or not 2 times, 3 times, like Boyle and UNG. Boyle being leveraged, UNG being not for nat gas. It shouldn't make a difference. The price action on the chart should still be the same. I don't agree with that. Chris, RML, we don't know it was low until its history. We don't know it was a low until its history. No, you do. Like, for example, NVIDIA today, you know it's a low. You know what the low is. It's 480.99. Yeah. You know that over here, come to the chart, Ram. You know that this trough over here is a 485.85 low. You know that this trough over here is a 486.75 low. And you're basing it on these. So your stops are going to be south of these points, right? So you already know that it's happened. So, and then that's why I say, you know, I don't just chase it. I want the price action to develop so I can base my entries and exits off key levels. And I think that that's what I mean on that. All right, I'm going to send it over to you for a little bit.
Yeah, for sure. Here's another one from BlackBerry. How do you identify a trend or trend change when not all your used indicators confirm the same? What's more important, volume resistance, daily lows or highs? Yeah, I think it kind of depends on the person too and how you trade, right? Like kind of what Sharif was saying earlier that kind of has really stuck with me is looking at the difference between like if you're going to use one strategy, use that for your entry and your exit point, right? So if you're going to look at VWAP per point of entry, you should also consider VWAP as a point of exit, right? Or using that or your point of exit. If you're going to use like price or risk reward, use that for both, right? So I think the biggest issue is not which one, at least from my experience, is not which one we're using, but make sure that you're using whatever strategy you use for both, right? So if you're going to exit that way, make sure, or enter that way, make sure you also exit that way. So I think with that regard, and I don't know if this really, I hope this answers your question in some way, but I think it's kind of whatever trend you're noticing, kind of using that with whatever indicator you're going to use. Make sure that, I guess that's the same one you use throughout that specific trade, if that makes sense. I think that would be my answer to that. Sometimes too, I find one thing that I run into, just because, you know, I'm obviously still learning, I think sometimes is not, if I'm just going to purely talk about like technicals here, looking at the chart versus looking at the tape, is I think I sometimes will run into, I'll be really over-reliant on one or the other, right? So I think for Tesla here, I think that, I'm just using this as an example, right? Because I mentioned in the chat, I was kind of looking at Tesla. This one, like I said, I was mentioning earlier, I was trying to see what we did at 425. We've had quite an obvious pullback, I think, from 425. We failed this kind of earlier area of support at 223, which is now what I would say is a lower low, right? So I'm using these what's the look is on the chart. We're looking at this from just like a kind of broader strokes, am I interested in entry perspective, but then I would also be looking at the tape in terms of like looking at specific prices, right? So what specific areas am I seeing, or price areas am I seeing resistance, right? Where am I seeing support? What makes sense for a point of entry? Because I think, yeah, like you kind of need, in terms of looking at kind of, I think a couple sometimes aspects of what's going on in the chart and in the stock to kind of understand how you want to plan your entrance, right? But yeah, in terms of like technicals, I think there's no really wrong answer. Like some people prefer working off of VWAP. Sometimes like what I'll do too is I'll kind of reference VWAP as kind of a point of entrance or exit. But I think what I really like relying on is kind of a combination of the chart movement and the tape. But I find if I rely on one more than the other, that's when I find I have trades that are more poorly planned, because I'm like really reliant on what's happening for like 2 seconds in the price movement here. Like for example, let's say, and I'm not really seeing, let's say I see like some support at like, oh, like we're really heating up at like 220, 230, and then I enter just because I'm seeing what I think is support there. But I mean, for a long, but clearly like we're heading to the downside, right? So I think you really need to kind of balance what you're looking at when you decide to make points of entry. I think that's kind of a long-winded answer, but I hope that kind of answered your question in some way. Yeah, because I find you kind of need a combination of, and there's no right answer for each person what indicators you want to use. Yeah. Yeah,
absolutely. All right. Zach Griffith, Adara, Sharif, love the new format, guys. Lots of knowledge being dropped today. And how about some bangs for 80% long options trade today? Love those dip buys. You know what? We'll give you better than that, my friend. We're going to spin the money for you there. Shout out to
Sharif's
Zach.
favorite button, yeah.
Right? Shout out to Zach Griffith there for the big time L. A big time dub. My mistake there. Yeah. Manuel Palma, Sharif. Any advice on moving your stop loss? I'm having a problem with that. Sometimes I lose good trades because I start moving the stop loss even when I know I shouldn't. Yeah, that's a biggie right there. So I'm assuming you're talking about moving your stop down as in moving your stop up as a trailing stop. Yeah, that's just, you know, kind of a discipline thing. You're going to have to put your foot down. You're going to have to accept that when that stop triggers, you're going to be losing money, but you have to look at it as big picture. This is kind of a marathon, not a race, right? Unless you're like a 0.1% of the people that day trade, you're not going to make a home run day trade where you're going to like blow up your account 100-fold and you can retire off, you know, the proceeds of 1 or 10 trades, right? This is about trying to stay in the game and not having your account blow up. If that is going to be your thinking going into this, you're going to have to accept taking the L when your stop loss triggers. If you don't, it's going to create bad habits. You may get away with it once. It may even end up being profitable for you. You end up turning what was a loser because you had a stop loss, you know, not trigger at $330, and all of a sudden it runs to $340. You make $10. But how many times out of 100 is that going to be the case? And that's really what it's about. It's about the marathon. It's about trying to stay afloat in this game and not having your account blow up. And if that is going to be the case, you are going to have to be disciplined in getting out. So that's just what I hope that helps there. Stop hair loss. Yeah, I don't know, bro. I think we're gonna need a lot more than what we got right now for the stop hair loss. Man, that conversation that Obi and I had about the heightening surgery still haunted me in my dreams.
Haunted me, and I was just like behind them overhearing this, like, what is happening?
Right,
and like the level of like knowledge too that was brought to the table, I was like, this is like, I had no idea this was a thing. I learned a lot.
Where does he
even
find
secondhand.
out?
Yeah, and he knew like so much about it.
Yeah,
I was like, that's impressive.
Like, you could tell.
Right? We know trading, heightening surgeries.
He's not even here today. He's not here today. We can't talk about him if he's not here. All right, guys.
That was crazy knowledge, though.
Yeah, honestly, I love that guy. Let's see what we're talking about here. A Harkzor. Harkzor, yes, this is very true. I've had it happen to me, but all it takes is that one big loss where it keeps going against you. I'm learning to be more disciplined, take a partial L as potential turning points. I couldn't agree more with you. If you don't end up taking the smaller L, that smaller L could turn into a very big L, and that's kind of how your account gets blown up.
Yeah.
Now, that's different. That's different than trading on a prop floor here, obviously, because we have different rules. Number one, there's a lot of buying power back here. That's number one. Number two, we have shutdowns. So the computer will literally shut you down if you lose too much money. And then you can sit and, bite your nails or twiddle your thumbs in all day or figure out something else to do, right? But when you're at home, there's really nothing stopping you. I mean, you could continue to move your stops out. That $50 loss turns into $100. That $100 loss turns into $150. And there's not going to be anybody to stop you except the margin call, right, from your broker, or, the fact that you run out of money, whatever the case is, right?
Yeah.
But on this floor and on prop floors, we do have that risk management
built in.
Built in, exactly. And so that obviously helps quite a bit. The Hayes records, we're going to get to that one in a second. Personally, I set fib levels. We're going to talk more about these indicators, Hayes. We're going to get to them, but not today. We're still at introduction. Fibs, by the way, guys, Fibonacci's, we're going to talk about those. I set fib levels on the weeks, expected high and low move, and move daily. Entries based off my algo, and those fibs with a hard 10% stop loss. Scroll the stop to break even when 10% in the money and trail behind by 10 pennies. If that is your system, hats off to you. Follow it every time, and I'm sure it will end up paying dividends as long as you're choosing the right stocks to trade. Shout out to you, the Hayes records. I didn't even know that you used algos. You probably program, which makes you a better person than me by default already. I want to learn how to program Python, but
yeah, I know nothing. I hung out with a lot of comp sci kids in first year university. Mad respect. No, I have no clue. They would talk and I'd be like, that sounds really cool. But yeah, mad respect for anyone who can code because it seems very hard and I am so removed from that world.
Let's keep going with the questions here because fantastic questions that you guys are asking about today's subject matter. I really do appreciate it. And you can tell people are really thinking about this deeply and they're quite insightful in their analysis. Hey, Sharif, sometimes I have fear to pull the trigger when an opportunity shows up, always looking for confirmation. Any advice to control emotional trading? Fantastic question.
Yeah.
And when I first started on this floor, I was having trouble pulling the trigger, not only in my personal account, but on the actual trades here, and both. And the floor manager, who's gone, by the way, he went to Montreal, by the name of Greg. Some of you guys will remember him for his segments on crypto. He said something very, very insightful to me. He's like, you're lacking the C word, my friend, and it might not be the C word that you guys are thinking there in chat. The C word is conviction.
Oh.
Yeah, that's what I thought, Neil. The Neil,
Neil's getting called out.
The Neil, yeah, he was thinking a different C word there. In this particular case, the C word stands for conviction. If you lack conviction behind your trades, you're gonna see that you're going to find that it's hard to pull the trigger. But I got to tell you, the other thing that really helps with conviction, seeing the same thing happen over and over and over and over again. And that really only comes with lots of screen time, lots of repetitions. If you don't see it happen, then you've read about it in a book, you've heard a buddy say it, you've seen it in the abstract, you haven't seen it for yourself, and even if you've seen it once, you don't believe it's going to happen again. Yeah. You need to spend the screen time to know that this is the more likely to happen than not, and therefore you pull the trigger. I agree with you. I've been there. Keep plugging away, and then you keep going, keep practicing, keep spending time there, and then you'll notice that the pulling the trigger comes a little bit easier than it was before, and incrementally then until you just don't even think about it.
Yeah.
I'm gonna keep going here. There's more questions to ask. Damn it, this thing goes all the way down for no reason. Anthony F. On bad habits like moving stops. This is the subject matter of his question. Set as goal to not and track it daily, weekly until habit is managed, i.e. maybe week 1, 50%, week 2, 70%, week 3, 100%. Good way to go. Okay, that's fair. I personally don't want to do it that way. I just want to base my outs based on the price action and really nothing else. I don't want to have these subjective, moving targets. I think that creates for anomalies, and the data that you get back when you analyze your trades is going to be skewed. But I do see your point. You're talking about, adopting it incrementally for those who have, the psychological block. I get what you're saying, Anthony. I respect it, just not how I would want to go. Going down here, David Fabian. My firm stops me when I'm down 50 bucks. It saved my butt several times. I'd be broke, man, by now. That's the stop here on the floor for trainees. It's $50. You break $50, you're stopped out, and then you can basically you have to wait to the next day before you can start trading. So 50 seems to be something that's
it's a good level, yeah.
Standard, yeah.
Yeah, makes sense.
You want to take over for a little bit?
Yeah, absolutely, yeah. It's interesting too. I think kind of in regards, this kind of answers the question about kind of being afraid to trade and kind of waiting for conviction, because this is something that I kind of dealt with a lot initially too, where it's like you see a setup, but you're kind of worried, you don't want to mess up. And I think I also, when I first started, was very scared of the shutdown. And I think I was so scared of the shutdown that I was making teeny tiny trades, like not mega caps, like these really small trades. And now it's like, I see a setup. So something like this, I was trying to get into Eli Lilly, and then I kind of was like, I think I kind of missed my point of entry here. But it's, kind of like looking, because I'm seeing this setup. We've seen these throughout the day. We're up really high on the day. I know also Eli Lilly, we have a catalyst. We're trending up with the news that Wegovy, which is Novo Nordisk's, that's a hard name to say in plural, Novo Nordisk's weight loss drug is also doing well. So I know that Eli Lilly is trading in sympathy with this. So I see a dip, and you kind of want to get in on this dip, right? So I think it's kind of looking at this, trying, obviously it maybe got in too late, but it's kind of looking for things that, like Sharif was mentioning, repetition and kind of getting in on that. Also, I want to answer this question from Harry Lou. This is a little bit higher up or older in the chat, but thank you very much. Shout out to Harry. Where is this? Could you talk about what you're looking for in the tape, as you just referred it to as a supplementary way to determine entrance and exit? Yeah, so I think when I look at the tape, in terms of entrance and exit, I think what I'm looking for, and I'm going to use a stock that moves a little bit faster as an example, like more of like a Tesla, because Eli Lilly and Netflix, those are the ones you have to really watch the tape for specific points of entry. But yeah, Tesla and NVIDIA, the mega caps. And I think specifically when I'm talking about really looking at the tape for points of entrance and exit, I think the mega caps might be a better example for that, because the tape can move really quickly. But because the tape moves so quickly, if I'm seeing a specific point of resistance where we're really chopping in like a 10, 20 cent range for a good while, then I'm noticing, oh, we have some support here, or oh, we have some resistance here. And if what's happening in the chart, or on the chart, graph, whatever you want to call it, if what's happening here is kind of backing up the movement that I'm seeing in the tape, like for example, if I'm seeing we're kind of heading to the high side and I'm seeing a nice little trough of support here within that 10 or 20 cent range that I'm mentioning on the tape, then that might be where I want to set my point of entry. So I think I don't know if that answers your question, but I think that's a really good question. I appreciate you mentioning that, because I kind of glossed over it. I think when I talk about using the tape to kind of guide my points of entry and my risk and what I'm kind of willing to look at, that's I think what I'm referring to. Also, I think with tape too, it can kind of help you with regards to risk. If you see something that has a larger spread, I think sometimes that can be a little bit more risky, right? So it's kind of using these other measures to look at levels and risk in addition to, when we're talking about, VWAP, volume, what's happening in the chart, right? I just think it's like another supplementary level to look at here. Let's see what else.
I just got to read this. Is hilarious. When I said the C word, you should have seen all these guesses.
Oh,
you guys,
we're pretty funny.
What the hell's going on over there, guys? And then Neil had to chime in. He's like, I didn't hear the full thought. I just heard C word. Come on, man. All right, guys. C word almost always, on this show at least, will mean conviction, okay? Yeah. Because we're talking about trading and trading conviction. Quickly, we're going to digress a second here from the lesson. Tesla and the Cybertruck, news on that front. Don't think that you're going to buy a Cybertruck and flip it for double the money. According to
I saw this, yeah.
To Elon Musk, he doesn't want resellers making money off his Cybertruck and selling it for big profits. Tesla threatens Cybertruck buyers with lawsuit and $50,000 in damages.
Which is crazy.
If they opt to sell within a year of their purchases. We know that the Cybertruck is going to start getting delivered by the end of this month. I don't know who gets it first, what state. Usually California got their cars first, but I don't know if that's the case anymore. Yeah. If users sell the Cybertruck for any unforeseen reason and Tesla agrees, you got to get written consent, and Tesla agrees that they warrant an exception to its no reseller policy, the user has to notify the company in writing and give Tesla reasonable time to purchase the vehicle at the price listed on the final price sheet for less than 25 cents a mile driven, reasonable wear and tear, and the cost to repair the vehicle to the company's used vehicle cosmetics and mechanical standards segment. So there you go. You got to let them buy it back first. Otherwise, they're going to come after you, and they're going to send Elon Musk's lawyers. I'm saying his name funny on purpose. They're going to come after you, and they're going to want $50K in damages. So it's interesting. I looked at Sean over, and I said, Sean, I showed him these, and then he said to me, he's like, do you like that? I'm like, well, I have mixed feelings about it because have you seen the Hummer EV?
No, I'm going to look it up.
So the Hummer EV is like 150,000 Canadian MSRP. Go on Auto Trader and try to find it for less than 200. Almost impossible. So everybody's making big boy money off the Hummer EV.
It's a nice car.
Yeah, it's a really nice car. I sat in it last year at the auto show. It's pretty cool.
Oh, really?
Yeah.
So I guess you must get into resell your Tesla, your Cybertruck then. Sorry to make a terrible pun, but I can't help myself. There we go. We're still punting. New midday, still puns.
Right? Yeah, new midday, still puns, baby. All right, let's look here if there's any other questions. I haven't seen anything here.
I saw one kind of directed at me from Thomas Johnson, so thank you for this. And I think I'm going to try to answer because I think it's a really good question. What is the best time frame to confirm closing candles or wicks at key resistance support levels? I love this question. I think it also probably, depends a little bit, on like kind of how you trade, right? Because we were talking about like different time frames of trading. So like sometimes using the 30, for example, and then confirming with the 5. I think for myself, I usually use the 5 for everything. But for example, if I find it's kind of harder to tell what the trend of the trade is going to be, or if it's a little bit of a harder to read chart, then I like zooming out a little bit and looking at the 10. So like, for example, if I look, compared to the 5 here, I think you have with the 10 a lot clearer retracement on Tesla. You can see it's a little bit less of like kind of trading horizontally. We can really see with the 10-minute because it's kind of a wider time frame and it's kind of more of a condensation of the data, right? We can see we are headed to the downside. So I think sometimes it's like I usually like to use the 5-minute just kind of flat out to kind of, that's the time frame I like looking at candles for. But if I want to confirm, to get a better sense of what's happening, then I'd like to use a wider time frame. Sometimes the 15, I usually like to use the 10 though. And then another, actually, to kind of go off of your question too, something else that I was thinking about when you said that was, I used to use the 1 minute a lot. And I think I find, and then I kind of went to the 3 minute and then now I like the 5. But I think the 1 minute's really hard to tell because like what you see, like one candle on a 5 minute or a 10 minute can tell you a lot more than a single candle in the 1 minute, right? Because I think, you can have like this great movement up or down, but that doesn't really, kind of tell you long-term how it's going to go. I do think that, like, as I was saying earlier, there too, I think the 1 minute is helpful on my side charts when we see stuff like this, which is this kind of constant testing and these wicks higher that we can't really fulfill. So it shows we are still not having support to the high side. Tesla is still at least, in this range, kind of a short, right? So I think that's where the 1 minute's helpful. So to answer your question, I think A is kind of what you're comfortable with, and B, I think kind of confirming on multiple time frames like we were mentioning earlier is really helpful to kind of see how a chart's going to be.
Absolutely. Absolutely. Couldn't agree more. All right. As you can probably tell, we've been involved in this meta trade for a little while now. And the reason we have been involved in this meta trade is because of the 330 level. It's really no secret what Meta's been doing here. We're up 0.5 percentage point, so we're already outperforming the NQ, which is down almost a third. It's about down 0.25 percentage point here. But look at these wicks into 330 and the corresponding VWAP. So it's showing you that this is a key level of support. So for the first topic in the topics list today, planning entries. So if I was to look at this after we've already had 2 touches at 330, I would say to myself, all right, cool. Comes back, I'm not saying that I would do this because the third time maybe not a charm here. But if it comes back into 330, I'll punch along and my out will be the break of 330. Well, and I'll give it a few pennies because Meta tends to be a bit spready. So I'll get at 329.80. I'll give it 20 pennies, right? So this is kind of like what people were asking. Well, Sharif, how are you basing your stops? And how are you getting in on your entries? Well, to me, 330 has been an obvious level here, especially after that 332 and a third top. Definitely looks like the real level is 332 because it's only wicks into that third of a dollar. And then in the same way that we have wicks north of that 332 is the same way that we have wicks into 330. They're only wicks. And all the closing prints, which I respect more, are north of that 330. So it looks like you're getting a key level of support at that 330 level. And then the beautiful part about it is it gives you a very definable level. You know that 330 level is what you're looking at. If it breaks 330, and again, give it some room, it's a $300+ name, you're out. That's the end of the trade. So we'll have to see how that goes. Sally Huang. Like Jensen Huang, I like that.
Oh, yeah. Lisa Sue's cousin.
Shout out Sally.
Yeah.
All right, guys. Well, her name is Sally Huang, right? What do you think of AMD? You got to be asking me about NVIDIA, Sally, not AMD. That's your third cousin's business. Yeah. In case you guys are wondering what the hell I'm talking about, Lisa Sue and Jensen Huang are third cousins.
And this is Sharif's new favorite fun fact.
Oh, yeah.
It's really cool.
Yeah.
Like, I heard it too, and then I didn't realize they actually knew each other. And then when you told me this, you were also like, they grew up together.
In the same town.
Which is even cooler. Yeah, because it's like, imagine being their other third cousins too, right? Where it's like, oh, what's the family doing? Oh, well,
imagine being at that dinner table.
Right? Like, it's like power, like,
that's
and especially because they're in the same industry too, right? Like, I heard.
I'd love to be at that dinner table, I'll tell you.
I'm sure the discussion is like, why? I mean, you have to be careful too, because like you were mentioning, you don't want to give away trade secrets, right?
You can't drink too much at that dinner table. That's
one
horrible,
glass of wine.
Right? Yeah, I gotta watch what I'm gonna say around my family. Come on.
Yeah, right? Madness.
I'm kidding, of course, guys. We're just joking about that. All right, guys, AMD, let's have a look at AMD, as it is obviously weak on the day. It's off lows, though, no question about that. It was down over 2%. Now it's down 1 3/4 on AMD. Look, let's look at the levels. First and foremost, what is the closing print? Friday's close, we were just at that 118.5 level, 118, I want to say 60, 59. We're obviously nowhere near there as we're at 116. But look at that 116 low. It's exactly 116 low. So you already have a definable out. To me, if you really want to get in here, I would, if you want to punch in here, punching in at 116.57, you're going to have to, you're going to have to give this to 116. So it doesn't mean every trade is a viable trade. Because if you're going to give this 55 pennies worth of risk, you have to be able to at least justify a 1-to-1 reward ratio. In that case, you have to have a 117 break. But look where VWAP is. It's south of 117. It's around 116.94. So you already know you may encounter resistance ahead of that 117, therefore putting the trade at a possible less than 1-to-1 risk reward. However, if you were to break above the highest peak over here, 117.71, sure, it would justify at the time, but look at the recent price action. All the pops north of VWAP, all of them were wicks, and they were all sold off, with the majority, 99% of the closing print, for the exception of this one candle at 11.05, all of them closed below VWAP. So I wouldn't be so, I wouldn't be so interested in getting long on AMD now. If you were looking short, definitely that would be interesting. Okay, you already know it's down 1.75% on the day, so it would be a trend trade rather than a counter trend, and I would be giving it to at least 117. So you could, I'm not saying 116 is going to be the bottom. I don't like this in-between trade because the risk to reward doesn't set up that well, right? If you get in at 116.5, you're going to need to at least give it to 116. To print 50 pennies, but look where VWAP is. Again, it's less than 50 pennies north. So to me, I would stay away from this trade personally until it sets up a little bit differently. But yeah, AMD, definitely weak on the day. Didn't really see why. I saw news about NVIDIA introducing new supercomputers today. Did you see anything about that?
No, I saw some Micron news too. I actually still have it up. So Chinese chip maker Yangtze, I'm so sorry, I'm probably pronouncing that wrong, Memory Technologies Co. has filed a lawsuit against Micron for alleged infringement of 8 patents. So Micron is down a little bit today. I'll just pull up Micron here, because I know Micron is down. AMD, I haven't heard anything. Micron's kind of recovering though a little bit, stutter step to the upside. But yeah, I haven't. I'll look into AMD. I have not heard anything currently, though.
NVIDIA CEO Jensen Huang says his AI powerhouse is always in peril despite a $1.1 trillion market cap. When did Jensen make all these comments, by the way? Where is he?
How is it always in peril?
Yeah, well, yeah. Oh, that's being reported by Fortune.
Oh.
Yeah, go ahead.
No, that's interesting. Yeah, no, I just also... Monty G, I just really like this comment. Wow, Elon, good job. First person to reach Mars will be Tesla's stock price. I enjoyed that. Yeah, currently I'm in a short on Tesla, and the reason I got into this, because I'm sure understandably people would be like, you guys are talking about risk reward and you are in the strongest stock of the day as a short. I got in initially because we did have these, these slight wicks to the downside. Ooh. Tesla did seem like it was retracing. The pattern was retrace-ish, especially when we looked at this 10-minute here, very retracey. If we hit and decidedly stay above 223, I'm out. But we're having a really hard time staying decisively above 222.50. When I initially got into, we were kind of like struggling, as you can kind of see here, struggling above 222 even. So I do stand by this point of entry for now. Like I said, though, if we decisively break above 223, I am out. But I honestly think, based on what the pattern is on the day, especially if I go to the 10-minute, the longer time frame, it looks like we are retracing a little bit. We're cooling off a little bit. We hit 225 briefly, pulled back. Tried to hit 225 again, could not hit it. So based on, talking about looking at points of entry, right now I'm comfortable with this. But yeah, that's, so my approach to risk reward is, yeah, if we get to 223, I'm out. I'd probably get out just because I guess my approach is a bit more of one-to-one because I scalp anyway. But I'd like to get out part of my position at 221-ish, and then the rest probably like 220.50. We shall see what we have to do. Greg Moore in the chat, I think you're golden below 223. Thank you, Greg Moore. I certainly hope so. But yeah, we'll see. I chose this, because we were seeing, I'm also comfortable even as we go up a little bit, because we saw that earlier too. We went up just a little bit and then we fell to the wayside. We're struggling at 222.50. That's the big trade I'm in so far today, this little Tesla short here. Yeah. All right.
Good look there. Keeping my eye on some names here to see what we got. All right. Just having a look here at the markets. Another day where the Russell is stronger than the NQ and the ES. The Russell's flat, about 0.5%. Let's have a look. I'm just going to mention some general market stuff here. Yeah, just going to switch this to this one. There we go. So now we can go like that. All right, the Russell, guys, up sorry, down 0.4% on the RUT. We've been seeing some strength in small caps lately as the end of the year comes along and tax loss harvesting becomes an issue. So it looks like as if, we may get an interesting bull run in the Russell and the small caps who have been absolutely beat up. But I continue to feel that small caps are going to be underperform going into next year as we are in a higher rate environment. Higher rate environment hurts these small caps, no question about it. I'd still be overweight. Personally, not financial advice, I'd still be overweight the mega caps and the big tech sector. All right, the Dow is also up 0.15. It's outperforming as well. While you have the NQ down 0.29, the ES down 0.08. The Dow and the Russell trying to find their footing in Greensville. With respect to yields, you had a way bigger pop on the yields today. We got to 4.7 on the 10-year, and now we've retraced down into 6.5. But yeah, that was a big move up for the 10-year, which was knocking on the door of 4.4 the other day as yields tanked on Friday. The 2-year is down 0.2 as well, and the 30-year is up 0.5 point today on the day. U.S. dollars red, and gold is up marginally at 19.5. That 1,950. So a decent day for gold, but definitely coming off those highs, off that $2,000 rejection on gold from last week. Yeah, so that's a look at more macro market stuff. With respect to big caps today, we've got 3 of the Mag 7 in the green. It's Meta, it's Tesla, and it's NVIDIA. Everything else is red on the day. Those 3 outperforming, with by far Tesla being the strongest, up 3.83%. On news that a company in England is going to be looking to buy more of their supercharging stations, expanding that from 600 superchargers into 20,000. So that's not a small amount there as Tesla becomes quickly here the world charging standard, essentially. And I was telling Neil the other day, I'm like, or not even the other day, this morning, I asked him, I'm like, dude, are there any electric chargers at the gas station near your house? He's like, no. They just put in 4 at mine.
Really?
And they're superchargers. Yeah, it was a Shell, by the way.
That's wild.
Yeah. Not like my condo can get any. Which
I know you're really upset at the condo.
There's
and
a
it's
bunch of dinosaurs over there, man.
They're a little bit older.
Bitcoin trader, Idera, Sharif, what stop loss percentage do you guys use normally? Okay, so we talked a little bit about this. Yeah. I told you, like at the top of the show, I'm sure you can go back, you can rewind, you can have a look, but I'll repeat it again. I don't use percentages, retracements off my entry as the areas for my stop loss. I use the price action on the chart. I'm looking for a decidedly lower low where it says, this is the line in the sand where the trade is no longer valid. Every situation is going to be different because every chart pattern looks different. However, there is a body of thought or a school a school of thinking or a body of thinking, whatever, that uses something called the average true range to base your stop. So essentially it looks at, how much a stock moves intraday on average. And it says, okay, well, the average true range is $10 for this stock. I'm giving you any number. And based upon that number, they're going to adjudge where they put their stops based on, essentially the volatility, the intraday volatility of the stock. It's not without its skeptics. It's not without its people that don't like that idea. But there is a whole group of people that use that. If you're one of those person that subscribes to it, we'll probably talk about it more on a future show. It's not something that I use. There's also many other ways to place your stop. To me, though, it's specific price action, like the trade on Meta that I'm in right now. I'm adding in front of 300 because 300 keeps holding. 300 keeps holding. However, if the NQ decidedly gives up 15,550, this 300 level on Meta may not hold. But for now, we've got umpteen amount of touches off VWAP, off that 330. Yeah, and literally. If it breaks 330 decidedly on a closing basis, that's where I'd get out. So I would personally like to place it based upon the price action rather than having, a percentage below or using ATR or using any other method. That's just the way I do things, but everybody can do a little bit differently and it works for them. So
makes sense, yeah.
Yeah.
I mean, yeah, speaking of doing things a little bit differently, still in this Tesla short, we kind of have a bit of a break of 223, which I said was where I would kind of consider exiting. So I'm going to kind of wait and see what we do here. We're having a really hard time staying decisively above 223, though. So I'm going to kind of wait and see. I know this was kind of a, for some, I know in the chat here, kind of a questionable one to get into in the first place. But if we look back at the 10-minute, we do see we have kind of a steady retracement happening here. Even like these wicks to the upside, we had the same thing earlier and we still went back down, right? I think we've had a really hard time staying decisively above that 225 if we ever did at all. I think we kind of kissed it, flirted with it, and then kind of ran away, right? So I think that's why I'm comfortable staying on this trade for now, especially as we're kind of continuing to see this pullback off of 223. So we're going to stay in this one for the time being, hopefully for a good time and not a long time. We'll see what we see. Also, this is kind of not a question, but off of what you were saying earlier too, with the small caps versus the mega caps. I was seeing this tweet yesterday that apparently the mega caps and like the S&P 500 are outperforming small caps by the biggest margin, at least last week, since the dot-com bubble.
Wow.
So yeah, so it's been, I'll see if I can find this tweet.
No, I can believe that.
Yeah, no,
Russell has absolutely taken it on the chin this year.
Yeah, no, so it's been really, it was a really interesting one. I came across that last week and I was like super stunned by that. So now you just mentioned that and that kind of, so yeah, it's like literally legitimately in a way that you can physically like see and think about when you think about like the dot-com bubble, and now we're apparently like a greater margin now. But yeah, so anyways, so definitely a very weak time for small caps. Just interesting to look at that and actually seeing that comparison there. But yeah, still chopping along in this Tesla short. But yeah, what is happening in the chat here? Yeah, I think in terms of risk management too, like even just to kind of bring it back to what we were talking to earlier, like with this trade specifically, I got in, this was my point of entry because we were noticing a little bit of support here. Like look at how long we were dancing around 222. Because it was a decent while. That's why I got in around 222. And now, as you can see here, we're kind of failing this 223 repeatedly, which is why I'm staying in for now. And it's sort of the same thing we kind of saw here, although I think we went down a lot faster here at this 224, 50-ish area. So I think this one, we're kind of having a bit more resistance and movement around that 223. Talk to us
about your out. So what's the trading plan there?
So the plan,
because it's right on point.
Yeah, I was mentioning this too in the chat to someone. I think if we decisively have movement above 223, like a decisive break at 223, we're dancing around and above 223, then that's when I get out. But we did wick above 223, because I would like to address that. We did have the wick above 223, but it was brief. It did not last very long.
Tell us why you're looking at 223.
So 223, I was thinking, because I think for myself, I like kind of the whole dollar-ish levels. I got in just above 222. Oh, there we go too. Yeah, I was thinking about that too. We also have, thank you. This was be a higher high. If we break this 223, what is this?
Essentially,
20, yeah, basically 223. So then if we kind of break that, then yeah, I knew there was I was just trying to find a way to word it right. If we break above that kind of area, this right here, which would be a higher low, basically, right? And then at that point, I don't want to be involved in this trade. So that's why 223 is my level. Also, because I want to see about the same kind of movement upward that we had earlier here, right? Where we did have a bit of movement upward, then we kind of headed back to the downside. This is why I like this 223 level, because I don't want us to break that low. At that point, the trade would be to use Sharif's term, it would not be valid anymore. But right now, it's pretty valid because we're not decisively breaking above that level.
Okay.
There we go.
Fantastic. Thank you for articulating that, and well said. Guys, uranium having another good day. We've been talking a lot about uranium lately and how it keeps running up very strong. Look, there is a new type of technology called small modular reactors, SMRs, okay? These bad boys, they're nuclear reactors, but they're on smaller scale, and it allows you to expand by installing new ones. So you don't have to have one of those giant ones that we see on The Simpsons with a big chimney stack. No, you can add as your city grows, as your town grows, as the needs of your locale grow, you can add to these bad boys. And there is a good Canadian company who's involved. The province of Ontario, the province where we live, essentially a state, is going with it. They've announced plans to have them for many northern cities, these small modular reactors. They're considered green energy, and please don't get into the politics of uranium in the chat. But for the moment, they're looked at as green-ish. and it's been very strong lately. Let's have a look at Cameo Corporation, because this one has been running like a dang rocket ship.
It really has.
This year. Absolutely. Look at this, Adara. We started off the year, the beginning of the year there at 21 bucks, and now we're knocking on the door of 45. Yeah. So we've already doubled the money. It's been up and to the right, higher highs, higher lows going on the year. I mean, I was talking to Brendo about this morning. I'm like, Brendo, they're looking for something different than batteries. You know, they've had it with batteries. They're looking for, you know, the hydrogen. We saw, you know, what's it called? Plug. Absolutely, you know what, the bed. But prior to the you know whatting the bed, they were on the receiving end of $7.5 billion in federal funding, because they're looking at, you know, trying to diversify their clean energy. We know that there's solar, we know that there's wind, we know there's others. So nuclear now being looked at as a real alternative here. Uranium has absolutely been skyrocketing this year, and so has Cameo Corp. Shout out to Cameo Corp. It's a Canadian company, baby. We're going to give that one a shout out. 4% on the day. Look at what CCJ has been doing today. Right at 9:30, gets off the schneid, as my friend Neil likes to say, at that 42.5, comes all the way up to 43.5, retraces, back down, holds about 42.80, and stair steps up and to the right, knock on the door of that 44 and a third. Good day for Cameo Corp today, up about 4% on the net. CCJ, Kinzoku Ushi, CCJ, that's Cameo Corp. Yeah, it's right here. Have a look. So I always put the ticker right there. So just look for, in the background, CCJ, and it's also at the top left over here, but that one's a lot smaller, hence why I put it over here. Yeah, that's the look there. Very good move up on Cameo on the day. Let's see what they've been doing the last few days. Yeah, it had a decent day. October 31st completely ran counter market, because that's the day the market tanked. And, you know, stair-stepping up. This, to me, it's, even though it's up 4% on the day, it's not really an intraday trade. It's more of a buy and hold. So that's the look there. We'll see how it does. Now, look at Meta. The people that were asking me about, like, getting in your entries, look what we just did on Meta. Another dip into 330 and another hold. You had a quick wick below. You skyrocket back up. 300 is obvious. Sorry. 330 is obviously a level intraday on Meta. You know, it's been a range trade essentially since around 12 o'clock onwards. So about an hour and a half, pardon me, of range trading on this name. But who cares? It's giving you the 330 level. It's a present. Take it, right? And then if you breaks down below 20 pennies, you risk 20. You could have risked 20 to make 80 like umpteen times. Look how many times it dipped into 300 and presented you with a 380 touch or a 331 touch. So many times, right? So this is the kind of thing where, you know, you can kind of try to practice the whole risk to reward ratio concept that we were talking about this morning. Now, if it ends up breaking down, it breaks down, that's fine. But for the moment, it seems to be holding up. Oops, let me just move back, see what the NQ is doing. But you got to keep your eye on the NQ as well, because as the NQ goes, as some of these big cappers go. So, yeah. What else we got over here? What are people asking? Anything asking? No. So Rolls-Royce to the moon? Rolls-Royce is moving up? I didn't even know that. What's the ticker for Rolls-Royce? Let me guess, RR? Is it? No, it's not. RY, what is it? It's on the pink sheets? RYC. CEY. Thanks, Katina, man. Yeah, it is.
Ricey.
Yeah, of course, not patience. Yeah. RYCEY. Let's bring in this bad boy. How's it doing on the day? It's up 3%. Okay. Rolls. Rolls, not a bad look for Rolls today. Yeah, Raheem Alani is so funny because my friend lives in the same building as Raheem.
Really?
Yeah, and my friend's very wealthy. Okay. Right? Yeah, he went to high school with him. He's got multiple Rolls Royces. So Raheem's like telling me the story about how like Raheem had the best car in like the garage area, and then this guy got his Rollses, and he's got multiple Rolls Royces. And Raheem's like, I went from having the best car in like in the lot to the worst car in the lot. He's like, tell your friend to leave my building.
Oh my
right?
God.
Like, we were joking, of course.
That's too funny
about that.
Very
funny. Rolls-Royce having itself a great day. It's been a great few days, actually. I'd say a good month for Rolls.
It's speeding into November. I'd say.
Yeah, but they're not really known for their speed, but you can still go with that.
It's a car pun. It was weak sauce, I have to admit. It was not like the best pun I've ever made, but it was a pun. So there we go.
Alfred is wealthy. Yes, Ozan, he is. But he is the cheapest individual you will ever meet because, well, that's just, he looks at it as a badge of pride. Yeah. He's got a 2001, and he can afford more than this, 2001 Subaru Impreza, okay? And he maintains the hell out of that car, and he wears it like a badge of honor. You cannot claw that car away from me. He even told me that when he does get rid of that car, it's going to be like, you know, it's like going to be like putting away a family member, according to him.
Oh my gosh!
Shout out to the Alfred. Yeah, he loves that car. You
very intense.
Yeah, he's an intense individual.
Yeah.
But yeah, that's what we're looking at right now. And we just broke down below 15,550. But let's talk a little bit about this this futures look over here, Adara.
Yeah,
because
let's do it.
We're having those wicks south of 15.5, but look at that. Look at it. You get wicks below 15.5, and then you get a defend, then it moves up. But this feels like it might be like a flat bottom break below that view up, unless we continue to get bought up and have closing prints above 15,550. Right? Like, look how many times we've been dancing with that level. We've been so consolidative, down 1/3%, Adara, on that level. We haven't even touched view up. We've been close to it, but we haven't really touched it.
No, it's been definitely like playing it. It has its cards close to the vest, the NQ. It's deciding what it would like to do, for sure, yeah.
Is it a WRX, Ozan? No, it's not. Just a regular Impreza, not a WRX. And it's definitely not an STI, obviously. If it's not a WRX, it's not an STI.
Yeah, I know nothing about Subarus, but I'm going to smile and nod like I do. My limited car knowledge, as I mentioned, extends to boxy-looking cars. I like a Nissan Cube. I like a Chevy HHR, which I don't even think they make anymore, but my dad had one when I was in high school, and I was a big fan. That kind of, if it looks kind of, or also like the Jeep, like the I think it's the Wrangler.
The Wrangler.
I think it's the Wrangler. Yeah, I like the Jeep Wrangler.
Bronco?
I need to look at the Bronco.
Oh, we're breaking down here.
We are, and I'm pleased as punch, but.
So how's your Tesla short?
My Tesla short is doing really well. I mean, by doing really well, I mean we're still within my point of entry, which I'm comfortable with. So I'm happy. But yeah, we're kind of. I'm still interested because if you look at here, look at this little breakdown we're having. So I'm happy. I'm all smiles.
That looks like a good breakdown there.
It does look like a good breakdown.
Break through 221, that'd be fantastic.
That's what I'm hoping for, right? I just need us to. Where I start to get nervous is the fact that we keep running around, or I guess in Tesla space, like zooming around this 121.70 and then right back up to 220. But then again, I'm also more confident the more that we fail to break 223, right? So I'm still very cool with the short. I'd like to make that clear. Part of me though is wishing I just kind of done the range up and down 223, but I'm trying to get more comfortable with staying in trades longer. And you know, the thing is too, this trade never went outside of my comfort zone in terms of risk, right? That's what we're talking about today is risk. Like, sure, I entered a short against what is arguably one of the strongest stocks right now, and especially the strongest stock in the NQ or in like these mega cap stocks, but I still had my reasons for doing it. Like on the chart, we do have, if we go back, I'm going to go back to the 10-minute to show here, we have retracement. It's very retracey. It's retrace-ish. Insert whatever word you want to use here, right? Like, and I mean, even this movement to the upside, I was comfortable staying in through that. Because we had that earlier too. I had my area that I wanted to leave, which was the decisive break of that 223 range, which we never got, so I stayed in. And I have my exits planned. Like, you know, if we hit 221, I'm gonna get part of the position out there, and then if we, you know, maybe below that, like I said, like 220.50-ish. The point I'm trying to make is I think this is like an example. We're talking about risk in terms of points in entry and exit. And I can defend that because we never went out of my comfort zone. If we'd gone above 223, I would have had to accept the losing trade. But because we kept seeing that play within that range, I was comfortable staying with the trade. It was still within my risk parameters. I never broke my risk parameters. So long story short, very happy that I'm currently in this trade. Also, apparently, Cleveland, someone mentioning Cleveland Fed is indicating a 3.16 CPI. Is what I'm seeing.
Oh,
here.
I see. That's what the prediction is. Yeah. So we have CPI on Wednesday. Is it tomorrow or is it Wednesday? Tomorrow. We have CPI tomorrow. Oh, that's interesting. Okay. So some housekeeping. We haven't done any housekeeping today. So we had 2 bond auctions. We had a 3-month and a 6-month. Again, there's been a lot of talk about why these shorter duration notes are being offered by the Treasury Department rather than issuing longer dated notes like the 30 and the 20. At 11:30 we had the auction. Previous on the 3-month was 5.285 with the exact same yield this time around, 5.285. The 6-month was met with a higher yield, so less demand. The 6-month, the previous yield was 5.260. This time it was 5.270. So obviously the higher the yield, the lesser the demand. Now the reason Treasury is issuing these notes is this is how the government makes money. So they've got a whole slate of things that they have to pay for, and they got to figure out how to get money. All right. Now they can make money through tax revenues, or they can make money through issuing of debt. And this is how they issue debt. So when you hear the government is indebted $20, $30 trillion, this is what they're talking about. These outstanding Treasury yields that have to be paid upon maturity. And in the intervening period between now until maturity, they have to pay interest rate. All that is government debt that's accrued. Okay? So that's why they do that. They have, anytime there's a budget deficit with the U.S. Treasury, they have to figure out a way how to generate more money. This is the majority of the time they're doing it like this. And by the way, funny enough, I should mention that at 2 o'clock today, we get the Fed budget balance, yeah, which gets 2 out of 3 horns. I love it. 2 out of 3 horns on the economic calendar here on investing.com. Previous balance was a budget deficit of $171 billion. This time around, consensus is about $65 billion deficit. We'll have to wait and see what that print is. That comes at 2 o'clock when the closing show comes on. So that's for today. There's other stuff as well. It's all commodity-based: soybean, corn, wheat, natural gas. I'm not going to talk about them because we don't typically get into that. Tomorrow, we have bright and early at 5:30 a.m.
Oh,
yeah, I know. Geez Louise. Fed Governor Jefferson is going to be spitting on the mic at 5:30 a.m.
Yeah, right. Sick rhymes.
And then we have, obviously, we have CPI at 8:30. We get the month over month, year over year. We get the core print. You guys know the whole thing. I want to talk a little bit about CPI and how it's measured in a second. But yeah, CPI reading. We get the red book as well at 8:55. Then at 10 o'clock tomorrow, we're going to have Fed Vice Chair Barr speaking. So more Fed speak tomorrow. That's at 10 a.m. And then at 12:45, Goolsbee, Fed Goolsbee gets on the mic at 12:45. That'll be during the midday. And then that's it, essentially. That's it. So we obviously have CPI. That's the biggie tomorrow. And we also have the Fed speak. So those are the housekeeping items for tomorrow. So make sure to mark your calendars or put in some notifications there. BlackBerry, the U.S. is, okay. I don't know, dude. I don't know how the rating agencies are rating them. But yeah, as you know, there's obviously, stuff going on with the rating agencies and U.S. credit. That's beyond the scope of the show, to be honest with you. So we're not going to get too much in that. DH. So how does downgrade and ability to pay debt weigh into that? Yeah, that's a good question. Look, the fact of the matter is it's the world's reserve currency, and that probably plays a lot into it. So we'll just leave that as it is. Did you get to this super chat over here?
No, sorry, I did not get to that. Okay. I can get to this now. Dr. W.J. Whopper just purchased BLNK. Any thoughts? Let's look at BLNK. I know this one was running on Friday. That I remember because I had it on my personal little watch list on Friday, and then I never got to it because I got blinded by the mega caps. But BLNK, okay, looking really nice. I think this one, I want to make sure I'm correct, but I believe we had an earnings situation on Friday with BLNK. We had an earnings situation with BLNK after market close on Thursday. So we still trading on Friday. Are you good?
Yeah.
on earnings here. So yeah, so this has been, yeah, I mean, we really nice movement off VWAP. We kind of had this bounce, went back up, another bounce at VWAP, kind of curling to the upside. I think it looks pretty strong. I would like to look at the daily as well, just to kind of get a better sense at how this one moves. Okay, I think, you know what's interesting to me? We always know I get excited when I'm sitting up here, that the charts are making me sit up. But yeah, what I like here is that we're kind of seeing a slightly higher high on the daily. So we had this, we were kind of moving downwards just a skosh here. And then we had this kind of movement down starting around this, like, what is this, 340-ish area. But now here, we're slightly higher. We're just barely higher, but we're slightly higher, right? Like if I hold it right here, we can see we're a little bit kind of going higher on the daily. So I think this, like, the longer term outlook for this one looks kind of nice to me, at least personally. But yeah, I think like we're 11% up on the day. Looks pretty strong on the day to me as well. Volume is good. It's about 4.7 mil. And we have a 1 cent spread. So to me, yeah, I think BLNK looks very nice. Looking less kind of nice, or at least just kind of still within making up its mind, is the Tesla short. Which I honestly, like, I think we're having, what I'm kind of noticing is this, like, I think I might have mentioned this, but we kind of get to 221.70, 221.80, and then we kind of have a hard time breaking below that. So if we have another wick down there, that might be the point at which I exit, because at least then we're still making some profit. But I'm not, let's put it this way, I'm not super worried about us breaking above that 223. I say that now. But like the trend is kind of to the downside here, at least within this range that I'm looking at. We're definitely kind of still dancing in this range here. Yeah, so that I'm going to stay in there for now. Like I said, we haven't hit my risk parameter of this area above that 223. So I am pleased as punch and hanging out for now in that trade. Yeah.
Good stuff. Good stuff.
Thank you.
All right, guys. In case you're just joining us, this stuff on the side over here, the planned lessons there, yeah. We have a new midday format now where we're talking about a specific theme on the day. Today, it is how to manage risk. We talked about it for a couple hours. We need to look at it again. So basically, the perfect thing to apply it to is my trade here on META. Somebody by the name of, let me just get their name, shout them out here. Harry Lou was asking me about my trade on Meta. So how many times here are we going to touch 330, right? Showing that this is an obvious support level. However, with the more spready names like we talked about at the top of the show, where you have a more volatile name, or it's like a name that has a 10, 15 penny spread between the bid and the ask, you have to allow for a bit of room between your actual out and the actual stop price. In this case, I have it down at the 75 penny area, giving it about 25 pennies worth of risk. Okay, long at 330.22, looking for something in the 331 area. It's been a range trade essentially since around 12:15. It is 1:40 now with about 20 minutes left on the show, and we're still doing the same thing. But we haven't really given up the ghost. We've been holding that VWAP level, that 330 level. But if it does break below that 329 3/4, that's where we're going to end it. And that's basically how we planned the trade. Got in because 330 was a very clear level of support, and then the risk to reward ratio essentially is about 50 pennies because I got in at 320.22. And I was going to give it to 329.75, so give or take about 50 pennies or so for what we can see here is a possible touch at 332 1/3. So much greater than 2 to 1, even if I was to actually just take the range. Forget about the high a day touch. The actual range is between 330 and 331. Getting in at the low end of 330 and giving it 20 pennies already gives you more than a 2 to 1 risk to reward ratio because of where the top end of the range is, which is 331. So it's about choosing your spots sometimes on these names and waiting for the right area to trigger. But recall, right, your stop loss. It shouldn't be one of those things where you're moving around. You shouldn't be dollar cost averaging if you haven't planned it in the trade, okay? It's absolutely fine, a DCA, but it's got to be part of the plan. In this case, for example, if you got in later on Meta, let's say at 330.50, but you still like that 300 level as an area of support, sure, DCA, dollar cost average at 3.25, but your stop shouldn't change, right? The thesis behind the plan should be the same, which is 300 level, VWAP level is holding, and sure, I'll get some more shares in because it took me a little bit of time to get in the trade and I didn't have a good entry point, but that stop should still be the same because that doesn't change. The thesis there hasn't changed. So we're looking to see if we can break that 331 here on Meta, but there's undoubtedly an area of support at 330, that general area. All the wicks there have been all bought up, and now we're moving up nice 50 pennies in the money at 330.75. Let's see if we can get that 331 break, guys. So what happened to our topics? They're gone. Okay. Yeah, they gone.
R.I.P.
That's all good.
Yeah.
In any event, that's a look there. Because I had the topics set up and I forgot what they are now. Here we go. Planning, risk reward, stop outs, and then emergency outs. Obviously, we don't have any emergency outs here, but the stop out would be the break of that 329.75. The risk to reward ratio we talked about, if it's a range trade, your risk to reward is going to be a lot higher if you get in the towards the bottom end of the range, and then planning your entries obviously here would be around that $330 area because of previous price action, and obviously we're looking for areas of resistance where we take profit. So that has to be also part of your plan. So if you're looking here at this chart, you know that 331 is a local high, right? Haven't broken that since around 1210. Okay?
That's a good point, yeah.
So you get into that 331, you should be wetting your beak. By the way, I watched The Godfather on the weekend.
Oh.
Correction, everybody. I told you guys that the wetting the beak term was from Godfather 3 during the assassination scene when they try to kill all the heads of the New York families, and then we want to be in business with you, Michael. No, it wasn't the Immobiliare. It was during Godfather 2 when they have that reminiscing scene about Michael's dad, about Vito Corleone, when he first comes in.
When he's De Niro, right?
Yes, De Niro.
Okay, there we go, yeah.
The part played by De Niro. And then he has a bigger mob boss. I forget his name. I think it's Don Chichi. Is it Don Chichi? It is Don Chichi. Don Chicho? Don Chicho, thank you. He comes to him and he's like, look, man, I hear you and your friends, you guys are running stuff. You're stealing from this, you're stealing from that, but yet you don't pay my wife a visit. You don't get her address. You know I have 3 daughters. Where are the addresses for my 3 daughters? I just want to wet my beak a little bit, and that's where it came from. And I need to clarify that with you guys because
I love the description. Yeah, I love, like. We fact check over here. We fact check over here.
Yeah, fact check.
But
exactly.
yeah, no, that's.
Renata's so confused. She's like, "What?" Just not.
What is going? Yeah. We're explaining the history of the beak wetting here through the prism of Godfather. That would be my quick synopsis there.
Yeah, there you go.
Yeah, there we go.
Yeah.
But yeah, also there we go. Apparently Tesla decided it's going to be long. We broke the high. RIP. I'm leaving. Goodbye. Bye, Tesla. See you. Wait, no, but now we're retracing? Okay. Yeah, I don't know. I think, but the thing is, too, is I don't want to not get out just because, we went over my area of risk, so I'm going to make my exit because I don't want to we were just talking about risk reward, don't want to do something incorrect here just because I think we might have a chance at retracing, so I'm going to make my exit now. So hopefully that occurs. Yeah. Because I basically... Like I said, I was interested till we broke that higher high or the higher low there, which we clearly did. We went higher. I decided I do not want to be involved. I might have to change my point of exit here. But yeah, basically just not a huge fan of what's going on at this point in the trade. There we go. We're out of Tesla. Buy Tesla. I still stand by the trade. And I'm happy I didn't stay in like I was kind of thinking I might when we were having a bit of a retracement. And I think this is like an example. I still, on a technical level, I liked getting in here too because we did have that movement to the downside. If you see in the 10-minute, we have strong retracement. But, we broke my point of entry and I decided to leave the Tesla short. But I'm happy I stayed in as long as I did though too because, we did have that And maybe I should have gotten out when we were still testing that 221 area. But there was, you know, a while where we were kind of within that range that it made sense to stay in that trade. Once it didn't make sense anymore, I left. And I think that's my big thing too, is because earlier, and I even did this last week on Tesla, the second we kind of started to go awry, I would leave a trade. And sometimes those are good ideas. The trades were solid. So I think that's why I stayed in this one as long as I did. But the second we did have that break of support, I have exited. So that's my talk through this Tesla trade with regards to risk and reward.
Yeah, and as we move up on the market here, a nice move up on the NQ, 15,575, good move up. But look at this meta trade here. So we were talking about planning risk to reward. So getting in here at the 330.20s, we're looking at least something here in the 2-to-1. So that, you know, we're going to have to at least give that to the break of 331. So if we're going to risk 50 pennies on this, because, right, my L's going to be 329.75, right? That's the risk to reward. So in order to have 2-to-1, we need something akin to $1. So we need a 331 break around that 331.20-ish area. Look how many times we're getting into 331 only to be held up and to be pushed back. Despite the fact that we are really curling up here on the NQ, you're having NVIDIA move up. You're even having the dead one, Apple, break through VWAP.
I love when we call
and get into 185. Your Stresla is waking up as well, coming into 224.
It's not my Stresla anymore, thank God. We left, because I was saying it broke above my point of, you can kind of see here, that it made a higher low, and I said, au revoir, sayonara. Decided to make my leave. Like I said earlier too, I'm happy I stayed in as long as I did, because I did still have my reasons for entry, but we broke out of that point I was comfortable with. And you know, we're talking about risk and reward. I'm happy I utilized it this way.
Yeah, good call on that, Adair.
Thank you.
So yeah, basically going back to what I'm saying here on the meta trade, that 331.20, if we're going to use the appropriate 2-to-1 risk reward ratio, we have to wait till around 331.20. And by the way, it is not Don Ciccio scene, it is the Don Fanucci scene, right? And that is the Don who's dominating like the early 1900, I think it was 1910s, that area of New York. And he goes around, he wears that white suit. I'm sure everybody remembers him from Godfather 2 in the memory scene. He wears that white suit, and he gets assassinated during the St. Mary's, what's it called, procession there, when they had like the procession for St. Mary, you know, obviously kind of symbolic a little bit there. All right, come to the chart Ram if you're able to. I said chart Ram.
I thought that was on purpose. And I was actually really, like, we like a pun. We like wordplay over here.
Yeah, he got smoked too, says Ponzi Fonzie. Yeah, he did get smoked. And with an improvised gun silencer there. But that's neither here nor there. 331. I'm going to set my profit taker at that 331.20 because that's the 2-to-1 risk to reward ratio. But the break of 330, and my stop will not move. We have to be disciplined in where we have our stops. No question about that. Is going to be that 329.75 area. We've been holding that 330 area how many times, and this should give you an indication that it is a level of support. And there's a couple of things. One, you have it here as a level of support that's reflective because of price action says that. The second thing, you have the whole dollar level, that $10 level. You know, it's a psychological level of support. And then third thing, you also have VWAP at that level. So you have many different areas here that are, you know, corresponding, confluencing. There you go. Chart. That's all I can say. It's chart. For this 330 level, but we're going to have to pack our patience, guys, because that is part of the trading plan. You have to pack your patience, planning entries at 300, planning exits through the break of resistance here at 331. That should kind of speak for itself a little bit.
Yeah, I think the packing the patience, that's something I was mentioning earlier too, right, with Tesla, and why I wanted to wait for that break before I exited, even though we were seeing, I mean, I'm going to pull up Tesla again now to kind of show this. But I was just looking at NVIDIA, which I will talk about with regards to entries in a moment. But so with Tesla, I did stay in. I wanted to pack my patience because we were, you know, seeing these wicks below 222, right? And I think earlier, as I was mentioning, I think one of my biggest trading, you know, Hamarshas, fatal flaws, whatever English word you want to use there, was that the second I would see things going wrong, I'd just get out. So I think patience is a part of also like managing your stress in a trade, right? Because if you know, as long as you have it out planned, you know, as long as it doesn't hit that out, I'm all ears, right? I'm free falling. I don't know what word you want to use here. Free fall. I can't sing, but yeah, good song. Now it's going to be in my head all day. But yeah, so I think the point I'm trying to make is I think when you have discipline, like, you know, what Sharif was just mentioning with the meta, having a plan of entry, having a plan of exit, then you can hack your patience because you know as long as it doesn't hit that levels, you're good, right?
Yep.
I'm also mentioning, I am going to mention, but I was looking at NVIDIA as well. This is an interesting one. We kind of had that triple top, but NVIDIA is not hitting 490. So in that case, if we consistently see, like we have this candle downside here, this could be an opportunity for me. I'm seeing the patterns here. I'm looking, you know, I think it could make sense as a point of entry, but it's like also, you know, wouldn't want to enter too high in case we go higher. I think for myself, you know, planning out my risk and reward here, if I would say for myself, maybe get in at 489, get out at 490, that would be like the high point. And then if you want to get out like 488, 487, right? That would be my personal NVIDIA plan. But just to mention, it's a trap. But yeah, just to kind of mention examples of risk reward in action, in IRL, in the trading world. That would be an example with NVIDIA, I think, for me.
Yeah, and we talked a little bit earlier about how to choose your stops, right?
Yes.
So we talked about looking for the price action, and in my particular case, I look for defined highs and defined lows. If I get in somewhere in between that defined high and the defined low, if I'm long, then if we break below that lower low, that's the end of the trade for me. It's no longer valid in my book, okay? Not every trade is going to be that, you know, binary, where we have, you know, a clear up channel, right, where we have a crest and a trough, et cetera, and it keeps repeating. Not everything's like that. For example, this meta trade, where it's sideways movement, where it's 330, that's the bottom, and 331, that's the top. So every trade is going to come with its own circumstances, and every trade is going to have to get you to think about where I'm going to put my stop based on this particular circumstance that I'm in, okay? Now, other tools that people have used, and I mentioned this at the top of the show, but it's worth mentioning again. A lot of people use average true range for a particular stock to influence their judgment as to where the stop needs to go. So, and I've talked about this informally. I've said to you, you know, when we look at a small cap gapper, right, we don't really know what the defined levels are because it's a wild one. It's running like crazy. It's popping up. It's moving down. You know, it may not have ran for like 6 months. It might have been dead and sideways for 6 months. So we don't really have levels off which to work. So in that particular case, what we're looking at is the range of each candle. Whether you're looking at the 5 minute or the 1 minute, if the range is 25 pennies for each candle and you're looking on average, okay, I'm not telling you to take one candle and make it the base, but if the average range for that one candle is about 30 pennies, your stop has to be influenced by the range of the average candle on that particular stock. You can't have a 5-cent stop on a stock that's averaging one candle range of 30 pennies, say on the 5 minute. Right? It doesn't make sense. You're going to get stopped out most likely,
yeah,
right?
That's a good point. Yeah.
So if you have to base it, your stop has to be based in logic, and it has to be strict. If you don't have a strict stop, your data that you pull to see whether your trades are, whether your trading style is valid or invalid is going to be skewed. Right? Because you're going to have a stop or in one area in one particular trade and in another area in a completely different particular trade. So you're not going to have consistent results off which to work. So that's what I'm trying to get at there. Try to have some consistency in how you place your stops and how you manage risk. Let's talk here to Kyle. We have about 4 minutes left. Kyle Burdett, big shout out to Kyle. I think you should touch on the importance of removing your trading mindset from the world you may live in. The market may be strong, even as a trader has a negative worldview. Absolutely, couldn't agree more with that. That's part of the psychological aspect. We'll get to the psychological aspect, I'm sure, in a future day. But today, you know, we're just going to stick with the risk management aspect. There's so many nuances to trading. I can't even get into how many different things there are. Kyle goes on to say, having my mindset to attach to my local economy or world events has cost me thousands. Absolutely, Kyle. Couldn't agree more. You trade the price action, not what you think the world is doing at any particular time. You can be kind of guided by it. So, for example, when we had the initiation of the Ukraine war, we sold off for a long time after that. You know, markets were very weak, and then all of a sudden we found strength again. Well, where did the strength come? Well, why is the market all of a sudden bullish after the initiation of the Ukraine war? You don't really need to understand why. All you need to know is it's moving up. And we're trending up. The trend is to the high side, and you need to base your thinking around that. So I couldn't agree more with what you're saying there. Sharif, did you have to endure big losses before respecting your plan? Man, I'm still enduring big losses. You didn't even see my personal account a couple of weeks ago. Don't even get me started on that. Nushe, how do I overcome small, silly losses to affect my entire trading day? Very good point. Very good point. And I think that really sticking with the plan here is really the only thing that you can do, okay? If you allow your stop to continue to go down because you keep adjusting it, so if it was a 20 penny risk, and all of a sudden that 20 pennies, let me adjust it to 40 pennies, or let me adjust it to 60 pennies, that's where you get blown out. But if you take those small losses, mitigate your risks, and don't allow them to accumulate and become accretive, you will be in a better position, in my humble opinion, than if you get lucky a couple of times because you adjusted your stop or DCA'd when you shouldn't have, and then it ran back up, okay? So that's just the look there. I hope that helps with that. Justin Sandoval, same with your opinions on companies. WeWork was an awful company, but it pumped for a whole year. Absolutely agree with you.
Yeah, that's interesting. I think a really good point. Yeah, because it's like, even if you don't like love the company, it can still be like a good stock to trade, right? Like, and you know, you can react to like news. If the news about it is positive, then you know you're gonna have a pump, right? So you're kind of like reacting to what the market's giving you and trying not to anticipate. Yeah.
All right.
There we go.
We are about 30 seconds or so left on the show before we send over to the big kahunas. At the big desk, they're going to be actually taking you into the afternoon. And we know what comes tomorrow, baby. CPI was probably why we're a bit of a sideways day, about a quarter point down. Tomorrow, keep your eye on CPI. Tomorrow, make sure to join us bright and early at 8:30 a.m. We're going to have that one live for you on the morning show, and then we're going to trade subsequent to that. So yeah, everybody that's been with us for a while already knows how we do. 10 seconds left on the show. I'll leave it to you to close out today.
Yeah, thank you so much for being with us on this new revamped midday. We are super happy to be here, pleased as punch. And yeah, excited to look at more risk management type information tomorrow. We're going to pass it over to the big desk.
Reno's there.
Hey guys, yeah, 2 o'clock. Welcome in on a Monday afternoon here as we head towards the close and what is turning into, yeah, pretty flat, kind of sideways, nothing day really as we await as